I know we said it wasn't a thing, but now here it is. It comes to surface with these BDRs, not just the Brazilian ones. The more, the merrier, right? The CEO from Overstock said, a gentleman approached him and he said, 3 things are going to happen to your company, and you know you're being naked shorted. And one of them was you're going to see your security being sold in countries just random countries around the world. So now we have these BDRs, and now you present another opportunity to naked short. You've created another market where it could be illiquid, and then now let's take a look at fractional shares. The SEC Investor Ed themselves provided an article on fractional shares, stating that fractional shares make the security illiquid. So now you have Robinhood and Webull selling fractional shares. And if you don't have enough to buy that share, well, you buy a fractional share. And they say, we don't have those. The market maker says we don't have those. So what do? They generate synthetics. So there's a bunch of all these tactics that are happening, like all these little things they're doing to allow them to legally naked short. Legally, 100%. And these naked shorts, they're not shorts that people care about. They're not shorts where the general population is looking at. Everybody's looking at a short squeeze, a traditional short squeeze, right? Volatile movement up because the shorts they're pinched and they had to cover. Yes, that'll be some nice violent price action. Well, guess what? The majority of the population is still using payment to order flow. So during that price action, it won't be as volatile, because it'll be as volatile as the market makers will let it. Granted, the shorts, they legally have to cover in the lit market, and that's the volatile movement that we'll see. But every retailer in there that could amplify that movement, it won't be amplified. So yes, we are going to see a short, and I think it's actually going to be synthetically generated. We're seeing these short numbers. We're seeing real shorts that have real reporting. We're talking about traders like you and I. We're talking about hedge funds. We're talking about industry whales, people going short on the stock traditionally that are reporting it, and we're seeing that reported in information from FINRA if they're reporting honestly.
That British, I gotta look at his name. Remember the British guy that did that YouTube thing on me?
Yes.
He's coming in here to talk.
Oh, nice, definitely.
He wants to hear our opinion on computer share because he's been promoting it.
Okay, yeah, no, I totally see why people are promoting it. And I'll he's definitely welcome, and I'll cover why people would be promoting it and why Susan Trenabal is
Since you brought up bringing in the YouTubers, I decided I'm going to start inviting them in here, and we'll have some conversations.
Absolutely, it's all about getting the information out. But so, where was I? Naked shorting, blah blah blah. Oh yes, shorts. So the shorts that the majority of the world population is like focusing on. This is why Gasparino and everybody else is laughing at us, because we're paying attention to the true shorts. There was a comment where I think somebody said, "Oh, is this somebody that knew a market maker or hedge fund or something like that?" Like, oh, is this? I think Gasparino actually said this. He said, "Oh, what's going on with this price action?" He said, "It's the actual retail traders doing it." He's absolutely right. It wasn't the market makers at that point in time. There are actual real people shorting the stock in that aspect, in that bubble. We're not talking about market makers, and that's a short squeeze. We'll see. That could potentially be a price range if allowed. How much volatility of the amplitude of volatility of retail traders that use payment to order flow is directed to the lit market. So a market maker can make it look more violent because they allow more to go there. On a traditional short squeeze, we can hit prices of $500, hit like what GME did. And then they say the short squeeze was done because all those true shorts are actually out. The short interest is down. The numbers are normal. And the market makers, the media, there's this AMC won, GME won, right? Because there is this giant horde of elephants under a carpet called failure to delivers that they don't want people to know about. This is the MOASS. This is where you have more X's than Pornhub. This is where the world is just jaw dropped and shitting their pants. Like, this is the entire stock exchange. It's not just AMC and GME. It's drastically a lot. But there's a lot of zombie OTC stocks that are just sitting riddled with failure delivers that are being leveraged against, waiting to die.
Like Sears?
Like Sears, right? Exactly. And,
Hold on, my
and
dog's
that's
going
the
nuts. I'll be right back.
people need to understand the shorts that the world is focused on is a $500 run up, and it's not what we deserve. We need to focus on the elephants under the carpet called failure to deliver, provided by parasitic liquidity from these market makers and wholesalers that not only destroyed retail traders, but destroyed hedge funds, destroyed industry whales. They have taken money from everybody and paid zero for taxes. As Biden said, it's time for them to pay their fair share. He's so confident that we're going to fix this economy without borrowing. I find it funny.
It's fucking hilarious.
Because
It's fucking hilarious.
Once he makes these people pay their fair share, we're going to be sitting good, and they're going to be cleaning our pools.
I'd just like everybody to know that AMC is at the highest short interest we have seen, reported short interest, in many, many months, the second highest of all time.
That's all I'm saying, dude. Second highest of all time, and we're feeling good. We're almost at $40.
Yep, and that's just the reported short
Can you
interest.
imagine? Like I said, dude, everybody's so worried. I don't know if you guys checked out Peter Hahn's latest tweet he just did there, but even he was talking about what you're saying, Wired, that he thinks this China shit was the biggest excuse for them to try and drop the price, but the CAT system's working, guys, I'm telling you. You're seeing it everywhere. They're not able to take out these naked shorts, and then continuously fill in sham resets and closeouts. That's why I told you you're going to start seeing these days where they're continuously borrowing $10 million. This is the second time now you've seen them borrow $10 million since the CAD system went live.
I'm fairly confident that
they have no choice now.
I'm fairly confident that Citadel is in bed with Evergrande. I'm strongly confident that Citadel has ties with the Chinese government. Not to throw a tinfoil hat on. Granted, yes, it's a tinfoil hat and it may be heavy duty, but I'm fairly confident. And because guess what? Guess who has the largest stake within Evergrande as well? Right? BlackRock. And then now we're seeing negative media on Twitter. Guess who has the majority stake on Twitter? BlackRock. Guess who's long on AMC and GME? Right? BlackRock. So we are looking at beasts of one percenters, of money movers fighting. That's what I see Evergrande as a fight between two companies. Because BlackRock's built on risk management, right? If you guys, I know there's a lot of negativity on BlackRock, but if you guys just do a little research on BlackRock, their business model is not predatory. It's about risk management and taking, reasonable risks and betting on growth in the community. It's not about capitalization and monopolization like Virtue American Citadel Securities. So please do your research. Prove me wrong, because I like to be wrong sometimes, because it allows me to either A, counter it and do more research, and so I learn more, or B, I'm proven wrong and I correct my statements. But I don't know. I think the Evergrande situation is actually power plays between larger companies. Boss, you?
The Evergrande situation, in my opinion, I like your theory. I personally feel it's the Chinese Communist Party out to kind of get some revenge against America, Europe, and a lot of these other cats, really, to by letting one of their largest banks default, they're harming their own people. But we've already learned from the past that the Chinese government doesn't give a fuck about its people, to the point where they literally, put restrictions on how many children they can have, and other things like this. They don't own the land on which they pay property taxes. There's many things. So I personally do believe that Evergrande's situation is purposely being controlled and handled by the Chinese Communist Party to let it default in order for the Chinese Communist Party to take these assets. And
we're ripping, by the way.
And then, once they take these assets, they'll be able to pay the creditors pennies on the dollar. And, basically basically all these people out of this money. So I think it's very controlled by the Chinese Communist Party. And they are more than happy with watching the stock markets around the world crumble, even if it takes down a portion of their Hong Kong and their Chinese market down with it temporarily. I think they realize that they could benefit from it greatly, much more so than America would. So.
I agree. I totally agree. I believe the CCP is letting this happen, letting the fear happen. I do feel Evergrande, in a sense, is going to get bailed out in a way of the CCP is actually going to take over Evergrande and all its assets, and it's going to contribute it toward this common prosperity motive, this common prosperity theme that they have going on, because the election's coming up, and it's good. I'm glad China is pushing that way. I don't know what the underlying motive is, but the Chinese people have been suppressed way too much, more than almost anybody other than North Korea in the world, and it's terrible. But I do feel that they're gonna use it in their ploy for common prosperity. It's a tactic on the CCP. They control everything, obviously. So let the company burn, take control of it, take the assets, and use it to your advantage.
I agree there. They need to
and
just
yes,
let
like
things
hurt the
happen.
world, hurt the world economy. You're absolutely right.
Yeah,
Because
they
they know
hurt the world
hurting,
economy because it's good for their own. That's
chip shortage. They control the chips, solar, all of that. They have a supply chain pinch on us, I guess. But then we have the same to them, so it goes both ways. But yeah, we're seeing that type of power fighting out as well.
Yeah, I think it's really, really interesting situation, and they're gonna let it default, and they will probably, if they do save it at the last second, it'll have already destroyed markets worldwide. I don't really think they care whether they save the company or not. For them, it'd probably be better if it does go underwater, bankrupt, and then the Chinese Communist Party can just go and tell everybody, okay, we'll give you 10 cents on the dollar. We'll fucking take all this property off your hands for you since this company defaulted on it, and everyone who invested money on it and has 1.3 million people or so who have not received any homes that they already started, that Evergrande never even started building, but people already put down payments towards. Those people will probably receive a portion or most of their money back from the Chinese Communist Party just to get them to shut the fuck up. But in reality, they have no interest in creating any of these new apartments, and they may even pay them. Because they're China, they may even say, you know what, we don't have the money to pay you, so here's another apartment. Here's an apartment that's already completed in this ghost town that, like for example, we already saw, 18 sky rises, get imploded all at once because they have so many apartments and condos that are built that are completely empty that they have no reason for them. So the Chinese Communist Party might do the same thing that Evergrande Bank's doing right now, pay everybody in apartments that they didn't have to spend a dime on, and then just be left over with all this real estate and, put tenants in it for the next 1,000 years.
Who knows? I mean, that thing could have been built to fail, right? Like the long con, like China CCP is really good about like the long con, like the sneaky dragon. It's ridiculous. They could have built Evergrande, and this is heavy duty tinfoil hat stuff, but they could have built Evergrande because they have these giant cities that are empty, right? And they could have built Evergrande just to fail, to cause an economic issue, and put the world economy at weakness, and then use that, just use the whole thing like, okay, we're going to build, you're going to fail, but we're going to come and take over, and then we're going to provide this housing. We're going to make our economy boom by providing all this housing, cheap, affordable housing to all the people, all this population, and it's all upgraded and modernized, right? They're going to swing it in, and now the world's hurting, and China's succeeding with a more prosperous world where everybody's got good houses, high technology, everybody's doing good, and they close their market down too. They've closed it to where it's just mainly China trading as well. And now that you have this prosperous community where people have these nice houses, nice things, they pump money into it. Now the Chinese economy is going to be way better than the world. I can see this as a long con move, like deep thoughts.
Yeah, there's so much going on here. And quite simply, I like to tell people that usually the simplest answer is the correct answer. And how simple would it be for China to be well aware of everything that's going on with Evergrande and kind of just waiting for them, to become over leveraged to the point where they can't handle it anymore. And they knew that, things like COVID would really accelerate timelines on the situations that are occurring currently. I think that has a lot to do with it. They realized that, I don't know if everybody knows this, probably not, but just yesterday, September 21st, a new report was released stating that there are records that the lab in Wuhan, China, was being paid and expected to release the coronavirus nanoparticles into cave bats, which would then infect humans. And I believe it got away from them a couple weeks, just literally 2 weeks right before they were going to start doing that. And one of the people that was working there got infected. So it ended up working out perfectly in favor of whoever did this. But that is not the simplest answer. The simplest answer here is that the Chinese Communist Party probably read the writing on the wall, saw what was going on with Evergrande, and found it as a perfect opportunity to use it as leverage to tank the world global stock markets, because they know that 129 worldwide banks hold bonds in fucking Evergrande, and they could easily take this assets and never have to fucking pay people more than a few pennies on the dollar. It's
Right.
the best 100-year investment I could ever see on the table. You know what I mean? It's like the United States government going to a drug dealer and be like, oh, you sold you sold a gram of cocaine. We're going to take all your cars and house. It's the same thing. They're doing with Evergrande. Be like, oh, you can't pay your bills? Oh, we're going to take all your assets, and that's it,
Yeah.
Right, and they knew they had us in a supply, like they were a large flow of the world supply chain. And then also you take a look at the Belt and Road Initiative, where they're trying to create the specific supply chain that is within fully under their control. So it even restricts supply chain a lot. And then now take a look at the what's the name of the oceanic area to the east of China, in between like Japan
the
and
Indian Ocean.
Well, no, there's a more specific name for that area.
Oh, I'm sorry. I'm not
Whatever.
finding the exact word. I think
Sorry.
I have know what you're talking about, but I can't.
Indo-Pacific?
pinpoint.
Is it the Indo-Pacific?
There you
Or I
go.
don't know. I can't.
Yeah, I think the
but
Indo-Pacific.
that's
yeah.
That's a very vital area, and that's why there's a lot of tension there. For a few different reasons. Nuclear capabilities. If they take control of that area, it allows them to create a defensive position and an offensive position that puts their capabilities within nuclear range to strike the west coast of the United States and deeper in. So there's the nuclear side of everything, but then there's also a trade side to everything as well. If they gain control of that, then they can start to control and restrict trade on that side. So they're trying to take control of the trade routes all globally, because they know that they're a vital portion of trade for now. And with tied in the Evergrande and causing because yes, you're exactly right. All these bonds are invested in Evergrande, letting that fall. COVID-19, I did see that article as well. It is very believable. Remember, we're all wearing our extra heavy-duty tinfoil hats now. This is reality. This is all speculation based on what we see currently. It does make sense. It does make sense that they would release it to the bats. It would hit the Wuhan market, and then it would spread from there. But you're talking about highly contagious virus to humans, and so mishandling could have gotten these workers sick that our government and a lot of the world governments are suggesting, and then spread the virus from there. And then so now you put the supply chain crunch because you have this global pandemic, and then on top of that you throw the sweet collapse of Evergrande on there, and so now supply chain and everything is all crunched. Economies are falling, and they've closed their economy, so they're not impacted. They've closed themselves from cryptocurrency, so they're not impacted by it. And as the world is burning, they have this model, the shell already created to make their economy prosperous. Like they're going to get everybody improved housing. They're going to subsidize so much. Because they're looking for this common prosperity theme as well. So they're going to start subsidizing people, kicking money into their markets, starting to release technology and announcements that they've probably been sitting on for a while, and their economy is going to boom. They're closed off from the world economy. The world economy's hurting. Next thing you know, China's the big player in the game. They're the big holders in the national bank. They're the ones controlling everything, and that's not good in my eyes.
China's going to be taking over a lot. It's really, in my opinion, the beginnings of a Cold War, if you will, kind of a repeat of a Cold War situation, except this time it's going to be between China and America. And the kicker here, in my opinion, is going to be the lithium and other ores and metals that are available in Afghanistan and the Middle East, as well as the oil, because we all know the oil's always been important.
I think the U.S. is actually good on oil. Like the U.S. has been very good about.
Yeah, it's more about those that
minerals
lithium.
and
oil. The oil is probably right. The U.S. is probably good. I'm just saying, like, that's a nice little bonus. You know what I mean?
Yep, lithium is a new demand of a material, so it's not something the U.S. would have stockpiled. Like a lot of people may not know, but theory is that the U.S. stockpiles oil, right? Because the world's going to run out of oil. They stockpile gold, they stockpile a bunch of minerals, a bunch of really needed things that are going to eventually go away. We don't say it, we don't show it, we only put up a small front. And then I feel that the U.S. and other economies, just the U.S., are waiting for the rest of the world to use up all their resources. Because when you're the holder of all these resources, you hold the power. And either A, there's going to be a war to get that power, or B, there's just going to be this dovish mentality of, okay, we will just live happily and you provide it, you control it. Eventually the world's going to be, the world has to become one world. When these resources disappear, if we don't become one united world in some shape or have one sort of sense of control, or two, because there's always the yin and yang, but over underlying control of the world would burn. Because people are going to start fighting over resources. There's going to be a difference in poverty and riches, and we could be going to Hunger Games. We can go to Mad Max. It'll be bad. Oil runs out. Tanks don't run on solar. Not at this point in time. Fighter jets don't run on solar at this point in time. So oil is very key. Same with water. But yes, you're right. With lithium, that's kind of new. And then with the Afghanistan on a military, like on my military perspective on it, it's deep. And then you take a look at the resources, and then you take a look at, religion, and then even the inner groups within that is very, 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 very complicated. It's not a good thing we pulled out of there. We're not there to fight terrorism. We're not there to fight terrorism. We were there to occupy space to prevent other people from coming in there and creating alliances, which is technically happening right now. But I see why we pulled out of Afghanistan, because we do have Afghanistan is costing us money when we should be putting that money more on the Indo-Pacific side, right? We should take Afghanistan as a loss at this point in time, and sadly not to look doom and gloom. I see Afghanistan as a potential future battleground if it doesn't go into conflict with these other countries, right? We're not going to fight in China. We're not going to fight in the U.S. We're going to fight on an area that's kind of more neutral.
Yep.
And so I see Afghanistan, right? So I don't want it to go there. I would rather prefer the Cold War tactics, because I hate human life is very valuable and precious. Like everything living to me is very, very precious, because we're amazing things. So I don't want it to go there, but that's my outlook on Afghanistan. But yes, we should have been. I've been saying we should have been fearing China a long time ago, because it's the sneaky dragon, man. They're coming in, and you don't know that everything seems like it's all great. They're playing the other side of payment to order flow, right? They're it's good, price improvement. We're great. Come to us, right? That was with China. They're saying. They're providing all these great opportunities, deals, and this promise of things. Same with like the Belt and Road Initiative, all these other countries that they're playing a long con on, and eventually going to control them.
Hey, brother,
it's all a front.
You're making absolutely wonderful points, and the FOMC meeting, the Federal Reserve conference, just began, and it's live now. Would you mind if we listen into this a little bit? I am sharing my stream with you guys. Would you mind if we listen to this for a few minutes, and then we can always just chime in on it?
Yeah, 100%, dude. I'm all for it.
If you guys on Facebook, on Facebook or YouTube get some feedback or echoes, please tell me immediately. There is a slight delay, so I will not know for about 30 seconds.
Lower than June. If you could help us make sense of all those things as you sort through what substantial for the progress looks like that would be great.
Sure. So the test for beginning our taper is that we've achieved substantial further progress toward our goals of inflation and maximum.
Are you going to patch it into Discord, or should we just go over to your channel? Or is
part of the test is achieved in my view and the view of many others.
So whatever you feel is the best.
So the question is really on the maximum employment test.
If you can. Oh, you're sharing
if you look
Discord.
At
okay.
a number of indicators,
as well as streaming it
you
on
will see
YouTube at the
that
same time.
since last December when we articulated the test
Just
and
pull up his,
the readings
Discord
today,
screen.
In many
And share his
cases,
Discord
more
screen.
than half of the distance, for example, between the unemployment rate in December of 2020 and typical estimates of the natural rate, 50 or 60% of that road has been traveled. So that could be substantial further progress. Many on the committee feel that the substantial further progress test for employment has been met. Others feel that that
we'll
it's
just watch your stream.
close. They want to see a little more progress. There's a range of perspectives. I guess my
apologies.
own view would be that the substantial further progress test for employment is all but met. And so once we've met those two tests, once the committee decides that they've met, and that could come as soon as the next meeting. That's the purpose of that language is to put notice out that could come as soon as the next meeting. The committee will consider that test, and we'll also look at the broader environment at that time and make a decision whether to taper.
Thank you. We'll go to Howard Schneider.
Thanks, Chair Powell. Thanks, Michelle. So looking at the SEPs, we got now basically 4 years of inflation above target, and policy never gets to the long run rate. I'm wondering if you could address that from two perspectives. One, within the new framework that the Fed adopted last year, and second, from the perspective of the average household that's now being asked to pay higher prices and increasingly higher prices for 4 years running, when for some this year, real wages have actually gone down.
Sure. So as you can see, the inflation forecasts have moved up a bit in the out years. And that's really, I think, a reflection of, and they've moved up significantly for this year. And that's, I think, a reflection of the fact that the bottlenecks and shortages that we're seeing in the economy have really not begun to abate in a meaningful way yet. So those seem to be going to be with us at least for a few more months and perhaps into next year. So.
You know, I noticed right here that he's mentioning that he thinks that, supply chain issues are going to be with us for the next few months or years. And I think a lot of the reason why some people don't understand why I see things the way that I do is because I own a third-party logistics and a trucking company, distribution company, and I see this every single day. It has never been harder to find a good trucker, a good drayage company, a good ocean container handler, a good air freight handler, with consistency, because there's not enough manpower, there's not enough people driving, there's not enough people to load these trucks, to unload these ships and unload these aircraft. The supply chain issues that I see on a daily basis are not seen by 99% of people. The only people that see it are actually in logistics industry, because we see it firsthand. Everyone else, you can see it in your grocery store shelves, on the shops, everywhere you go, in retail stores. Everywhere you go in fast food places, they're always missing something, and even more so now. What we saw with toilet paper during COVID is going to be multiplied 100 times over, in my opinion, with many other products. It's not just going to be toilet paper.
That suggests that inflation is going to be higher this year, and the inflation rates for next year and 2023 were also marked up.
Powell, he's under scrutinization for insider trading.
Of course, I hope he is. Can you hear my mic still?
Yes, sir.
All right, great.
Just by a couple of tenths. Those are very modest overshoots. You're looking at 2.2 and 2.1. 2 years and 3 years out. These are very, very. I don't think that households are going to notice a couple of tenths of an overshoot. That just happens to be people's forecasts. We want to foster a strong labor market, and we want to foster inflation averaging 2% over time. And I think we're very much on track to achieve those things. In terms of the framework, I see this as very consistent with the framework. We want inflation expectations to be anchored at around 2%. That's really the ultimate test of whether we're getting this done under the framework. And we do want inflation to run moderately above 2%. I wouldn't put too much on a couple of tenths over 2% in 2023 and 24, 1/10 in 24. But you're right; those are the numbers.
Thank you. Let's go to Colby Smith.
Chair Powell, thank you, Michelle. Chair Powell, you mentioned ongoing discussions about the tapering timeline, and I'm wondering what the contours of that debate have been. For those that want to move a bit more quickly, is it about...
What you do is go to your sound settings at the bottom. There's an...
You talking to me?
Maintaining optionality for a 2022 interest rate increase, or is it about financial stability risks or concerns about the efficacy of asset purchases?
And then you can go to the browser that's playing
supply constraints.
The audio, and then the top.
Let me say that,
switch it from default
there's
to
very broad
wherever you
support
want
on
it
the
to go.
committee for this plan, both as to
Are you guys able to watch it on the stream or no? Maybe I could try it one more time here.
I don't know when my sound would be working. I can hear it.
Connection's a little rough at the moment.
to the timing and as
They
to
say
the
good now.
pace of
They
the
say
taper.
there we go.
So this was a unanimous vote today, and I'd say quite broad support for this approach. You're correct that there are some who would prefer to have gone sooner, and they've made their arguments publicly. For some of them, it's a financial stability concern, and for others, it's other concerns. They can make their own arguments. This is an approach that the committee will broadly support, and it will put us, having completed our taper sometime around the middle of next year, which seems appropriate. The asset purchases, as I mentioned, were very, very important in the early stages of the crisis. They were essential in restoring market function in the Treasury and other markets. Then, as the recovery got going, they supported aggregate demand, as they will do. And now we're in a situation where they still have a use, but it's time for us to begin to taper them. Their usefulness is much less as a tool than it was at the very beginning. And of course, this leaves the whole question of rate increases ahead, which is really where the framework is all about how we deal with rate increases and that sort of thing. So we think this is the appropriate way to go, and again, broad support on the committee.
Yeah, we can do it.
Thank you. We'll go to Nick Timrose.
I think he's full of shit.
You still don't? I think I just fixed it.
Yeah, Bigham's viewers can hear it now.
Excellent.
Hi, Nick Timrose of the Wall Street Journal. Chair Powell, you have said the test for liftoff is more stringent than the test for tapering. But if the near-term projections today are credible, more of your colleagues seem to think that rate liftoff and not just a taper may be closer at hand. Does the committee have a different opinion than you do about the threshold for liftoff that you've articulated, or do they believe that either inflation or economic growth will necessitate a rate increase sooner than you do?
Well, so again, substantial further progress toward our goals is the test for beginning the taper. And the taper takes some months in everyone's figuring, so you're going to be well away from satisfying the liftoff test when we begin the taper. So in terms of the liftoff test, though, it's what we adopted last September. It's labor market conditions consistent with maximum employment, and while we have interesting signs that in many ways the labor market's very tight, we also have lots of slack in the labor market, and we think that those imbalances will sort themselves out. Inflation at 2% and on track to achieve moderately higher inflation over 2%. That really depends on the path of inflation. If inflation remains higher during the course of 2022, then we may already have met that test by the time we reach liftoff. So I just think if you look at what people are writing down for year-end 2022 numbers, some people are writing down very low unemployment rates, and that's only one indicator, but it suggests a very strong labor market. And I think they're writing down in good faith what they see as meeting the test. There's a range of perspectives about where the economy will be, but by the way, all but one participants have us lifting off during 2023. So it's not really an unusually wide array of views about this.
Thank you.
Thank you. Thank you, Mr. Chairman. I want to follow up on Gene's question. The issue of ownership of these stocks and trades, do you think it's appropriate for Federal Reserve officials to be owning the same assets that the Federal Reserve is buying? Is that one of the modifications that you're looking at? And in that, you said yourself they don't clearly not seen as appropriate. In that, the Fed's code of conduct says Fed officials should avoid even the appearance of conflict. Do those trades, in fact, and holdings violate the Fed's code of conduct? Finally, do you have a timeline as to when you might be done with your review? Thank you, sir.
Don't have a timeline yet. We can start with that. Well, let me address the muni question, since that's in there. Personally owned municipal securities for many years, and in 2019 I froze that, meaning I'm holding all those securities, my wife and I, to maturity, and pretty safe place for a Fed person to invest, because as you know, the lore was that the Fed would never buy municipal securities, so it was not an uncommon thing. And so then comes the COVID crisis, and I reversed that policy, and I did it without hesitating. And the reason was that the financial markets, and including the municipal financial market, were very much on the verge of collapse, and it was time to go, and we did. But we also checked with the Office of Government Ethics, who looked carefully at it and said that I didn't have a conflict. So that's one answer that I wanted to share with you. Secondly, you're right, though. We're going to be looking at all of those things. I don't want to get ahead of the process here and speculate about particular outcomes. But this, again, comprehensive and deliberate process. We're going to make changes. I want to be able to look back on this years from now and know that we rose to meet this challenge and handled the situation well, and that what we did made a lot of sense and protected the public's interest and the institution that we're all a part of.
I'm sorry, Chair Powell, I just want to follow up. You said I was right when you said right about that the Federal Reserve should not own the same assets they're buying. Is that what
I think that's a reasonable thing. Yeah, and of course, for the most part, we don't. I mean, it was a real coincidence. I happened to pre-own these munis. They were bought many years ago, actually, and so we started buying munis as part of the municipal liquidity facility. So it was really it just was an unforeseen event, and I couldn't sell them. So what I did was I just held them, checked with the ethics people, and went ahead. So, but as a general principle, yeah, that makes a lot of sense.
Thank you.
Thank you. We'll go to Chris Vergaber.
Thank you. Thank you, Chair Powell. Well, I had a question about jobs and the Fed's schedule, the Fed's policy framework you laid out here. You and other Fed officials have often talked about expecting a job market pickup in September as more children return to school, freeing up more parents to work, COVID abating. You mentioned in the past the extra unemployment benefits expiring. There's some real-time data suggesting that we may not be seeing much of a return of labor supply. So do you still expect to see that in the next couple of jobs reports? And how would a relatively weak jobs report in September affect your plans? Thank you.
So you're right. We have really, I'll call it a unique situation where by many measures the labor market is tight, and 11 million job openings, very widespread reports from employers all over the economy saying it's quite difficult to hire people, wages moving up and that kind of, so quite a tight labor market. So our view, I think a widespread view a few months ago, was that several things were coming together in the fall, including kids back to school, which would lighten caregiving duties, including the expiration of extra unemployment benefits, and other things would come together to provide an increase in labor supply. And so we'd get out of this strange world where there are lots of unemployed people and a high unemployment rate, but a labor shortage. And so what happened was Delta happened. And you have this very sharp spike in Delta cases. And I think, so that affects, for example, when schools are open 60% of the time, or when they're always at a threat of being closed because of Delta, the Delta variant, you might want to wait rather than going ahead and taking a job and starting work only to have to quit it 3 weeks later. You're going to wait until you're confident of that. So some of that may not have happened. Also, people didn't, as you know, hiring and spending in these face-to-face service industries, travel and leisure, it just kind of stopped during those months. So that really the big shortfall in labor in jobs was largely in travel and leisure, and that's clearly because of Delta. So that all happened. And so what we know is that it didn't happen. It's going to take more time, but it still seems that inexorably these are people who were largely working back in February of 2020. They'll get back to work when it's time to do that. It just may take longer time. You're right, though, it didn't happen with any force in September, and a lot of that was Delta. In terms of you asked also about the test for November. I think if the economy continues to progress broadly in line with expectations, then I think, also the overall situation is appropriate for this, then I think we could easily move ahead at the next meeting, or not, depending on whether we feel like those tests are met.
Well, if I just quickly follow up, I mean, how much of that will depend on what kind of jobs report we get for September? And I mean, is it, are you in a data-dependent phase here where you need to see certain numbers going ahead, or are we at a point where you've accumulated enough progress that?
So it's accumulated progress. So for me, it wouldn't take a knockout, great, super strong employment report. It would take a reasonably good employment report for me to feel like that test is met. And others on the committee, many on the committee, feel that the test is already met. Others want to see more progress, and we'll work it out as we go. But I would say that in my own thinking, the test is all but met. So I don't personally need to see a very strong employment report, but I'd like to see a decent employment report. I mean, it's not to be confused with the test for liftoff, which is so much higher.
Great, thank you.
Okay, thank you. We'll go to Victoria Guida.
Hi, Chair Powell. So I wanted to ask about the Vice Chair of Supervision position, and I was wondering if you could speak about how you view that role and the extent to which you defer to that person on regulatory policy. And then just sort of a related question, as you know, Randy Quarles' vice chairmanship ends next month, and I was wondering if he's going to retain the supervisory portfolio until he's replaced in that role. Sure.
So Dodd-Frank created this position, Vice Chair for Supervision, and there's actually a specific assignment in the Dodd-Frank language, as I'm sure you know. And effectively what it means is that the Vice Chair for Supervision is charged with setting the regulatory agenda. And it's a specific grant of authority. And in the 10 years almost that I've been at the Fed, that person has really done that. Dan Tarullo certainly did it, and Vice Chair Quarles did it as well. And I would, I think I respect that authority. I respect that. That's the person who will set the regulatory agenda going forward, and I would accept that. And furthermore, it's fully appropriate to look at for a new person to come in and look at the current state of regulation and supervision and suggest appropriate changes, and I welcome that. In terms of Vice Chair Quarles' term, we're not currently in that situation, and I actually don't have any updates for you on that today. We'll keep you posted on that.
Thank you. We'll go to Steve Matthews at Bloomberg.
Thank you. Chair Powell, I wanted to ask about the inclusive monetary policy framework. In particular, Bloomberg surveyed economists, and we found that they predict liftoff will happen when the U.S. unemployment rate is 3.8%, but the Black unemployment rate is 6.1%. And I'm wondering if a 6.1% unemployment rate for African Americans is consistent with full employment, or whether it would need to be lower as part of your inclusive growth strategy.
Right. So the point of the broad and inclusive goal was not to target a particular unemployment rate for any particular group. Really, we look at a broad range a very broad range of metrics when we think about what maximum employment is. And one of the things we look at is unemployment rates and participation rates and wages for different demographic and age groups and that kind of thing. So we will do all of that. So I think if you look back, what were we really thinking? So we all saw the benefits of a strong labor market. If you look at the last 2 or 3 years of before the pandemic hit, you saw, after a lot of long progress, you saw a really strong labor market, and you saw wages at the low end moving up faster than everywhere else, something that's great to see. We also saw the lowest unemployment rates for minorities of various, for African Americans, for example, and also participation rates. I mean, we saw a really, really healthy set of dynamics. And by the way, there was no reason why it couldn't continue. There were no imbalances in the economy, and then along came the pandemic. There was nothing in the economy that looked like a buildup of imbalances that could cause a recession. So I was very much thinking that the country would really benefit from a few more years of this. It would have been great. And so we're all quite eager to get back to that. We also said we wouldn't raise rates just in response to very low unemployment in the absence of inflation. So that was another aspect of it, because we saw that really benefited labor market participants in a broad and inclusive way. That's, of course, not the current situation. We have significant slack in the economy and inflation well above target, not moderately above target. So that's really how we think about it. It isn't really just targeting the headline numbers, but it's about taking all of those things into account in your thinking about what constitutes maximum employment.
I guess just to follow up, should there be a significant gap between Black unemployment and overall unemployment for structural reasons that are outside of the control of the Fed that other people should be doing something about, or should the gap be narrowed, if not down to zero?
Well, first of all, ideally there wouldn't be any gap, of course. We'd all love to see no such gap. This is a persistent gap, and it's very hard to explain based on typical metrics. It's quite troubling, but it really is. We have famously broad and blunt tools. I think eliminating inequality and racial discrimination and racial disparities and that kind of thing is really something that fiscal policy and other policies, frankly, education policies and that kind of thing, are better at focusing on. I think we've identified the part that we can do, and we'll do that part. But I've always been clear that it's going to take policies broadly across society to work on these problems.
Thanks.
Thank you. Let's go to Michael McKee.
A plan for dealing with a debt default that included prioritization, that included changes in bank regulations, and possibly selling defaulted or non-defaulted treasuries and buying those who are that are. Are any of all of those still on the table? Do you think any of those would work? And what would happen to the economy, in your view, should the debt ceiling not be raised?
So I missed the first few words, but I think I got your question. So it's just very important that the debt ceiling be raised in a timely fashion so that the United States can pay its bills when and as they come due. That's a critically important thing. The failure to do that is something that could result in severe reactions, severe damage to the economy and to the financial markets, and it's just not something that we could contemplate, that we should contemplate. I'm not going to comment on particular tactics or things like that. I'm just going to say that I think we can all agree that the United States shouldn't default on any of its obligations, should pay them when and as due, and that no one should assume that the Fed or anyone else can protect the markets or the economy in the event of a failure, fully protect in the event of a failure to make sure that we do pay those. That's when they're due.
Good. If I could follow up, have you discussed options with members of Congress?
I don't generally ever talk about the conversations I have with elected officials or other appointed officials. But look, you can see that this is a major focus among those who have responsibility for it, and including elected people.
Thank you. Let's go to Hannah Lang.
Hi, thanks so much. Senator Warren sent you a letter last week urging the Fed to break up Wells Fargo, citing what she called ungovernable behavior from the bank. I was just curious, under what circumstances would the Fed actually consider revoking a financial holding company's license, and if the indiscretions at Wells Fargo, in your opinion, warrant such an action?
Right, so we're, of course, very closely monitoring Wells Fargo's efforts to fix its widespread and pervasive problems. They represent a serious matter to us, and the firm is required to remediate them. And we will take appropriate supervisory action if the firm fails to meet our expectation. We continue to hold the firm accountable for its deficiencies with an unprecedented asset cap that will stay in place until the firm has comprehensively fixed its problems. We're not going to remove that asset cap until that's done. Bottom line is we'll take strong supervisory action if a firm is engaging in unsafe and unsound practices or violating laws, but I can't speak to our confidential supervisory assessments of any individual bank.
Thank you. Now we'll go to Michael Derby.
Thank you for taking my question. You noted earlier in the press conference that you weren't aware of the trading activity of the Boston and Dallas Fed bank presidents. As you know, all 12 regional Fed bank presidents just went through the renomination process earlier this year, and Governor Brainerd described it as a rigorous process at the time. So I want to know, did anybody at the board level know about the stock trading activity? And going forward, do you still have confidence in the Dallas and Boston Fed bank presidents to do their job?
So these, I don't need to tell you, people file these reports annually, and I think they were just quite recently filed for 2020. So I don't have any reason to think people at the board would have known about particular trading that's going on. They will see that. There are people at the Fed who see that. See the trading reports when they're annually filed. In terms of having confidence in that sort of thing, I think no one is happy. No one on the FOMC is happy to be in this situation, to be having these questions raised. It's something we take very, very seriously. This is an important moment for the Fed, and I'm determined that we will rise to the moment and handle it in ways that will stand up over time. I'm very reluctant to get ahead of the process and speculate, though, about different things. And when we have things to announce, we'll go ahead and do that. But that's really what I have for today.
So one small follow-up. I mean, I know that you didn't have the 2020 forms in hand, but you would have had past year forms in hand, and at least in the case of like the Dallas disclosure forms, similar trading activity was shown in years past. So that in theory could have been something that came up in the renomination process.
So that's a good question. So, the 5-year review that we do under this unusual provision of law, where all of the Reserve Bank presidents are reviewed for reappointment at the same time every 5 years, that is really a broad review about their leadership of the institution, their performance on the FOMC, all of those things. And if there were a concern, a public concern or a private concern about something that someone had done, we wouldn't wait for the 5-year wait that day if there were concerns. You're right though. These, as I mentioned, we have had a framework for a long time, and it's similar to what other government agencies have, only it's a little stricter, and it is that you can trade financial instruments, but not specific ones like bank debt. You can't trade during the FOMC period and during the meeting, the blackout period, and then during the meeting, and then you disclose all this, and we have disclosed it for years. So all of these things have been going, to the extent they've been going on, they've been a matter of public record. And, but nonetheless, so that, it was seeming to work just okay. And now you look at it and you see this and you think, we need to do better, and we will. But you're right, but it has not been part of the process, and appropriately, I don't think it should have been. I mean, I wouldn't blame the people who conduct that review. I really think if someone had raised concerns, or if we'd had concerns, then it would have been, but it wouldn't have been part of that process. It would have been raised instantly rather than once every 5 years.
Thank you.
Thank you. Let's go to Gene Young.
Well noted.
Thank you, Michelle. Chair Powell, I wanted to ask about how the Fed would balance the two parts of its dual mandate. If inflation stays elevated, but we still have a labor shortage and participation remains lower than ideal, would you hold off on raising rates, or how would you think about that? Thank you.
Well, let me say one thing. You're looking for conditions consistent with maximum employment to lift off, and those conditions can change over time. So you're not necessarily bound by a particular level of the unemployment rate or the participation rate or anything else like that, which can change over time. But more to your point, really, we actually have a paragraph in our framework, and something like this has been there for a long time. I think it's paragraph 6. And you're talking about a situation in which the two goals are not complementary; they're somehow in tension. And if we judge that is the case, what it says is we take into account the employment shortfalls and inflation deviations and the potentially different time horizons over which employment and inflation are projected to return to levels judged consistent with mandate. So we used to call that the balanced approach paragraph because it had those words. So it's a very difficult situation for any central bank to be, to be in a situation where the two goals are in tension. And that paragraph tries to address it by saying we would sort of weigh the equities between the two, how long will it take, and how big are the gaps, and that kind of thing. We don't really think we're in that, we're sort of in that situation, I'd say, in a short-term way. But we think, we do expect that that this is sort of because of the COVID shock and the reopening and all that, you're seeing this temporarily.
Great. Thank you. We'll go to Edward Lawrence.
Thank you, Michelle. Thank you, Mr. Chairman, for taking the question. So on corporate debt, what happened with Evergrande that we've been watching, is that a preview of what could happen with the amount of corporate debt that's out there? In the past, you've said you're watching the level of corporate debt. So what's your level of concern right now? And would you consider the Evergrande Group issue a sort of a warning signal?
About the United States? No. Corporate defaults are very low in the United States right now. Corporate leverage built up over the course of the long expansion that ended with the pandemic. We were very concerned in the last year or so. We were concerned in the last year or so, and then I'd say very concerned at the beginning of the pandemic that if you've got a highly leveraged company and your revenue stops for an uncertain period, as things happened at the beginning of the crisis, we were very concerned that there would be a wave of defaults. Didn't happen, potentially, to a significant extent because of the CARES Act and the response that we undertook and all that. It was a much stronger response than we've ever had. And I think for whatever reason now you have very, very low default rates now among corporate debt. The Evergrande situation, it seems very particular to China, which has very high debt for an emerging market economy, really the highest that any emerging market economy has had, and the government has been working to get that under control. This is part of that effort. The government put new strictures in place for highly leveraged companies, and Evergrande is dealing with those strictures, and it's something they're managing. In terms of the implications for us, there's not a lot of direct United States exposure. The big Chinese banks are not tremendously exposed, but that you would worry that it would affect global financial conditions through confidence channels and that kind of thing. But I wouldn't draw a parallel to the United States corporate sector.
Thank you. We'll go to Brian Chung.
Hi, Chairman Powell. Just wondering if you could give us an update on whether or not you've had conversations with the White House about a possible reappointment, and then whether or not you would like to be reappointed as this chatter kind of builds up. Thanks.
I think the phrase goes, "I have nothing for you on that today." Sorry. I'm focused on doing my job. Focused on doing my job every day for the American people, and I don't have any comment on that, Brian.
Sorry about that. Let's go to Greg Robb.
Thanks for taking my question, Chair. I was wondering if in your discussion about the tapering, that you said that officials think it's appropriate to end around the middle of the year. If there was any discussion about what happens to the balance sheet, then I've heard some Fed officials say that they would not shrink the balance sheet. Was that discussed, and what's your stance on shrinking the balance sheet? Thanks.
So my thinking on this has been, let's get through the taper decision, and then let's turn to those issues. There are a number of related issues. You mentioned one, Greg, but and which you need to start to think about, and we'll do that. But we want to get through this taper decision and then turn to those issues, rather than start thinking about them now and having the minutes discuss them and get people thinking that we are focused on those issues, because we're really not. And we do have the experience of what we did last time. We've watched other countries and what they've done. So I think we'll be able to get to sensible decisions fairly expeditiously when it's time, but it's just not time yet in my thinking.
Thank you.
Thank you. Let's go to Scott Horsley.
Thank you, Mr. Chairman. You talked a little bit about inflation expectations, and there does seem to be something of a divide between market expectations and the views of professional economists, which are pretty much in line with the FOMC members, and lay people's expectations, at least as reflected in the recent New York Fed survey. How much weight do you put on lay people's expectations, and what do you think accounts for that divide?
So within, let's just take the household surveys generally. The New York Fed survey, let me talk about that specifically, and this is from the New York Fed. It's only an 8-year-old survey, and it does seem as though they're looking 3 years out, and it seems like there's a high correlation between 3 year and 1 year. For the most part, surveys are showing that households expect higher inflation in the near term, but not in the longer term. And that's also what expectations are showing. So there are many, many different inflation measures, of course, and that's why we have this thing called the CIE, which is it's an index of it's market-based measures, it's professional forecasters, and it's household surveys. And you just put them all, it's not, it doesn't have a lot of grand theory about it. You put them all in and you measure the change. So you should be, and also you measure things like the dispersion and that sort of thing. So you can look at all of that. And, it tells a story of inflation expectations moving up. Many of the different measures will also show inflation expectations moving back up to where they were in, say, 2013, which was before the drop in inflation expectations broadly happened in 14 and 15, around then. So that's not a troubling thing. But, inflation expectations are terribly important. We spend a lot of time watching them. And if we did see them moving up in a troubling way and running persistently above levels that are really consistent with our mandate, then, we would certainly react to that. But we don't really see that now. We see more of a moderate increase that is in the first part of which is welcome. And because, inflation expectations had drifted down, and it was good to see them get back up a bit. But again, we watch carefully.
Yeah, they're watching.
Thank you. Let's go to Heather Scott.
Everything's transitory. Sure. You just got done telling us that the Federal Reserve cannot protect us in case the market tanks.
Caught me off guard.
Of course.
Thank you, Chair Powell, for taking my question. I really appreciate it. Again, on the taper timing, you say it's going to last till the middle of next year, but with your concerns about the potential for upside risks to inflation, would you think you might need to have liftoff happen before you finish the tapering?
That's not my expectation. Of course, we can always. We haven't decided to taper yet, and we haven't decided the pace yet. So, you know, it's not my expectation that we would have to. We can certainly speed up or slow down the taper if it becomes appropriate, though. Absolutely. In fact, back in 2013 when we tapered, we always said we weren't on a preset course. I think this will be a shorter period. The economy is much farther along than it was when we tapered in 2013. So it makes sense to allow the runoff to happen. It's a very gradual taper. It will be when we agree on it. And but we certainly have the freedom to either speed it up or slow it down if that becomes appropriate.
But you wouldn't expect rate liftoff to happen until you're finished with that process?
It wouldn't. No, because when you're as long as you're buying assets, you're adding accommodation, and it wouldn't make any sense to, then lift off. I mean, what you would do is you'd speed up the taper. I think if that were the situation you're in. We don't expect to be in that situation, but I do think it would be wiser at that point to go ahead and speed up the taper, just because the two are then working in the same direction.
Great, thank you.
Thank you.
Okay, for the last question, we'll go to Jeff Cox.
Thank you, Mr. Chairman, for taking the question. I just wanted to check in with you to see if you have an update at all on the efforts from the Fed to develop a central bank digital currency. I believe that the report was supposed to come this summer, and indications that it's going to come this month. But the drumbeat seems to be kind of getting louder to see where the Fed's heading on this, and just wondering if you can provide some update there.
Sure, I'd be glad to. So we think it's really important that the central bank maintain a stable currency and payment system for the public's benefit. That's one of our jobs. We also live in a time of transformational innovation around digital payments, and we need to make sure that the Fed is able to continue to deliver to the public a stable and trustworthy currency and payment system. So there's extensive private innovation, a lot of which is taking place outside the regulatory perimeter, and innovation is fantastic. Our economy runs on innovation. But where the public's money is concerned, we need to make sure that appropriate regulatory protections are in place. And today, they really are not in some cases. So with that in mind, and with the creation of myriad private currencies and currency-like products, we're working proactively to evaluate whether to issue a CBDC, and if so, in what form. We have two broad work streams, one of which is really technology, both at the board and in the Federal Reserve Bank of Boston's work with MIT. The other of which is to identify, scope out, deal with, analyze the various public policy issues. As you mentioned, we do intend to publish a discussion paper soon that will be the basis for a period of public engagement with many different groups, including elected officials, around these issues. We think it's our obligation to do the work both on technology and public policy to form a basis for making an informed decision. The ultimate test will apply when assessing a central bank digital currency and other digital innovations is, are there clear and tangible benefits that outweigh any costs and risks? We're also, as you know, investing heavily right now in building a new settlement system for instant payments in the U.S. It'll be the first such major expansion of our core payment system since the 1970s. We found the case for this quite compelling. For consumers, businesses, and just ensuring that all financial institutions have access to the payment system. So bottom line, we haven't made a decision about the CBDC, but we will be issuing a discussion paper soon in order to form the basis of this public interaction that we'll have. Thank you very much.
If I can have a quick, can I get a quick follow on that? Thank you. I'm just wondering if you're okay. Are you concerned at all with kind of falling behind in the global race for digital currencies?
I think it's important that we get to a place where we can make an informed decision about this and do so expeditiously. I don't think we're behind. I think it's more important to do this right than to do it fast. We are the world's reserve currency, and I think we're in a good place to make that analysis and make that decision. By the way, which will be a government-wide decision. We would do this. We would have to have a meeting of the minds with the administration, and also probably with Congress. We would really like to have broad support for this. It's a very important innovation, and I think we would need that to go ahead, and that's the process we're engaged in. Thanks very much.
Thank you.
Wow. Well, that's the end of that meeting, and these guys are full of it. All they do is talk around each other. Yeah, these guys are full of it. I don't even know what to say about Powell anymore. Part of me, part of me thought that Powell's going to give us some good information and tell us about tapering, but he hasn't told us a damn thing worthwhile. Everything he said was just talking in circles. That's what I think. I don't know what their plan is to do about tapering. The Cliff Notes, man. Hang on, let me see here. Let me adjust this. Let me stop sharing my stream. My apologies with this. Guys, you guys don't need to see my stream anymore. I don't believe so, at least. But yeah, you guys are welcome to discuss with us as well. I want to hear what you guys have to say, because to me it sounded like he just said they can't do a goddamn thing to help us. They can't do a damn thing if the market crashes. They can't insulate the economy. They can't assist Americans. Your 401ks, your pensions are all in jeopardy, and they're pretending like everything's A-OK. When we're having one day 800-point drops in the Dow and the SPY's tanking, $2 trillion are erased from global equities one day, and the next day everybody pretends everything's fine, and they're watching it. So,
well, there was nothing said, but there's the tonality of a resolution, signing off, which just it's political theater.
It is political theater, isn't it? Because he's kind of like making it seem like he's coming up with solutions and guiding us, but in reality, what did he say? Absolutely nothing. Like absolutely nothing of value.
That kind of goes along with your, in the past I've heard you say,
hey brother, can you
kind of just
speak up a little bit, please?
Yeah, sorry. Can you hear me now?
Yes, much better. Thanks.
Yeah, no, I think him, commenting and saying that the Fed may not be able to be our saving grace kind of goes along with your. I think in the past you've said old Yeller. Just kind of putting out these letters to cover her ass to say, well, you warned us.
That's what it seems like. It's kind of like Powell's just doing the same thing. They're doing the song and dance so that they could tell Americans that they gave them a warning. You know what I mean? That they gave us a heads up and that they couldn't control it. They're telling us here, Powell said, that whatever happens with, basically he said whatever happens with Evergrande or other economic issues worldwide, the Federal Reserve cannot insulate us. They can't print their way out of this problem. This is going to be a much more serious problem than Americans are being told. Taking a quick look here.
Yeah,
sorry, go ahead.
I was going to say most Americans don't actually listen in. Or people in general don't listen to Jerome Powell talk and make their own inferences. They let the media tell them what he said, and then they look at the stock market and see how it immediately reacts. So I'd be interested to see, what is CNBC or Fox Business going to say, he said, or how are they going to interpret it for people? And then I'm looking at the market right now, and everything's pumping up. So the average retail investor is going to be like, oh, whatever he said must have been a good thing. I'll put more money in the market right now.
Yeah, it's funny how just right before the meeting, the market was tanking, everything's turning red, and then, about 5 minutes in, it's turning green again. That's just too much of a coincidence to me. So many people are out there But like, oh, he didn't say they're going to taper. Let's fucking buy more, you know, and pretending like everything's okay. So, best of luck to those.
What happened with the Chinese market today? Did it? Yesterday, everyone was like, "Oh, it's going to start burning today." I haven't really heard anything.
Beyond Evergrande's troubles, a slowing Chinese economy. China Evergrande veers towards default, a $300 billion global shock. Yeah. Let's see what it did today, most recently. China Evergrande went up 34% today. What a fucking joke. Oh, Evergrande. Here we go. Okay, so it's down about half a percentage point. Still trading at about 2.27, which is like 30 cents American dollars. You know, like literally 30 cents. Not even a fucking dollar. The stock is quite pathetic. What's today's? The 22nd? The Hong Kong market opens tonight. Thank you, Fan I Am. That is correct. China market is open now. Or was open, I should say. I think they're closed at the moment since they're so far ahead of us. I'm incredibly surprised that the market's pumping this well. But hey, to each his own. Yesterday, you know, the Dow lost, 800 points, whatever. It looks like, oh, the Nikkei over in Japan has lost over 600 points. That's a 2% change to the downside. The Hang Seng is down about a quarter, and the Mumbai in India is flat. The Shanghai is up 1%. Australia is flat. Taiwan is flat. So I think tomorrow we're going to see some crazy movement in Hong Kong when that market finally opens. But yeah, it looks like the entire world is green except for the Nikkei in Japan. And I don't know if you guys didn't, some of you probably didn't see one of my most recent videos, but Japan's 10-year bonds are negative 1.5% almost. European junk bonds are negative for the first time in history. German bonds are down in the negative territory. And it's America's next. America's next. We can only pretend that Evergrande's not affecting us for so long until it does. Yeah, I think this is a perfect time to... Some people are asking, is this the Great Reset? And in my opinion, I believe that it is their attempts at a Great Reset, at taking over a lot of Americans' real estate for themselves, keeping a lot of Americans in poverty and sick. It's a lot easier to control people when they're poor, broke, and homeless. So I wish that wasn't the case, but that's really how I feel with, companies like BlackRock paying 50% over market asking for real estate, while individual homeowners, many people that are renting for extravagant prices are not able to afford a mortgage because they haven't been at their job for 2 years, or they were recently laid off, or received unemployment or an eviction moratorium, and they no longer qualify for a mortgage. So our current real estate market is artificially being inflated by the purchases made by companies like BlackRock and other institutions. For those that are unaware, data reported through Ortex, the most recent reported was an increase of 3.82% in short interest for AMC. Changes as of Wednesday, 7 a.m. Eastern Time. This is 1 day old data, so it came from the day before. Short interest changed ever so slightly, negative 0.078. This is almost nothing. However, the cost to borrow has increased significantly. The average is now 2.2%, and the max was at 3.94%. So we're starting to see these things tick up. We're starting to see the cost to borrow come back up again. This is the 3-month chart. You can see where we're coming down from our $70 highs. That brought it back down. As of August 2nd, it's been just pumping up ever since August 2nd. As the cost to borrow, the estimated short interest, the days to cover. See, check out the days to cover right here for the 3-month loans, 2 week as well. That's this white line and the blue line, both exponentially increasing. Let's take a look at them on the 1 month so you guys can see this. The volatility has been crazy. It went up and down, and now it's just ticking right back up. As you can see, the days to cover is one of the things that's increasing pretty quickly, and that's what leads to failures to deliver. Here you got the 2 week in the yellow way up here, and taking almost 1.5 days. So it's interesting times ahead. What's up, Sub, Rich, Tap, Barrett, Jenny, everybody, Hobby? Thank you guys for coming out, guys and girls. Ian, Dave. Wow. Pam the Trader, you're here supporting us every single day. You're a moderator on the channel, and yet you still donated. I appreciate you with all my heart. Thank you so much. You don't have to donate. Your support every single day is more than enough. But thank you very much. Pam the Trader says, appreciate you, boss. Holding strong here with you all. Thanks, everyone, for holding. Have to get back to work. Have a great day. That's awesome. Thank you so much. And all those who don't know, 25% of all donations and earnings of this channel will go to charity for the life of the channel for as long as it exists and these videos are out there. So thank you again for your contribution. This month we are contributing to United States Veterans, the Gary Sinise organization, to benefit veterans in need. Mike Hawk says Zillow is the reason real estate prices are pumped. You're probably right. Zillow, like many other companies, buys real estate for cash, and then sells it later on in the future if they want to, or they, put a property management firm in charge and continue to make money off of it. Yeah, they're very smart individuals. They're very smart companies. And for them, it's not like us. For them, it's not a short-term, few years play. For them, they're looking to keep these pieces of real estate for 100 years or more. Thank you, everybody. Please drop a like if you don't mind. It's for the algorithm. Pam, Ron, everybody, thank you for subscribing and for your donation. Joseph Turner, thank you so much. Joseph Turner says, give the economy some more Coke, Jerome. And maybe that'll keep it going a little bit longer. Thank you again, Steve, Rant Steve, for your contribution as well. Thank you, guys. Let me scoot this over a little bit for those of you that can't see it quite there because my face is in the way. The free float percentage on loan of GameStop's around 12%. The price for GameStop is still up 19% for this month and around 1,700% for 2021 year to date. So I think the stocks are doing just fucking fine, in my opinion, even if they were shorted heavily for a couple of days or for several days. Excuse me, get that out of there.
Hey, Marcel, can I ask you a question?
Yeah, brother, I love questions.
Amen. Hey, so, like you said, AMC and GameStop have been heavily shorted. Even just this past week, we saw these millions of shares getting borrowed and obviously sold.
Yeah.
In this, short ladder attack. And then still, we're back above 40 now. Do you think that's just retail coming in to buy the dips?
I think it has a lot to do with, the reason, in my opinion, that these stocks are being shorted so heavily is because hedge funds and market makers had to roll over their futures contracts. There are 3-month, 6-month, and even 20-year contracts. Some of these contracts can be 2 decades, 20 years or more old. And so they have a small time window. It's called the International Money Market Dates. They have a small time window of about 2 weeks in which to roll these. And in order to keep the price from getting out of hand, because if they were just roll these, all the credit default swaps and total equity return swaps that they have, it would positively impact the price so much that it would cause FOMO buying. So in order to prevent that from happening, they short the stock very heavily to bring them down about 8 to 10%, and then they roll their futures contracts, usually towards the end of the day, the last 30 to 45 minutes of the day, and that's what causes the price action. So that's why over the last few days, I would say last week and a half, 2 weeks, you've been seeing AMC and GameStop go down from the beginning of the day all day long to about negative 10% almost. And then in the last 30 to 45 minutes of the day, they regain all that value, sometimes going positive a couple percentage or being negative 1% or 2%, which is almost a difference of zero for these stocks. A 1%, 2% differential to the downside is nothing, in my opinion, for these stocks compared to their historical selves. So I do feel very strongly that the reason they're being shorted is simply to keep them in check, because as soon as that they get a little bit too high, the rest of retail that's not currently holding, people that are not apes, people that are worldwide. They're going to see it going up, and they're going to decide, now's the time, I'm going to jump in. And that's going to cause the FOMO problem. So I 100% believe that the reason that these stocks are currently trading negative is only because they're being shorted through baskets of ETFs. The depository receipts are getting fucked around, globally, in which those can also be shorted, indirectly. So there's hundreds of ETFs that contain these stocks that have been issued through X-Trackers and BlackRock worldwide, and Luxembourg and London, and their cost to borrow, for example, the LIBOR rates are much cheaper than borrowing this 3% or 2% rates from AMC and GameStop. Plus, when they short the ETF baskets, you can't see the cost to borrow. I'm sorry, you can't see the actual short interest because they're not shorting the companies directly, they're shorting the ETFs. So when we're over here searching for the Ortex reported data, and we're not seeing that the short interest is what it really is. The short interest is showing, around 22% or so, which is pretty fucking high, the second highest we've ever seen. It's simply not higher because they're not shorting the stocks directly. When that happens, for example, GameStop in early January with Melvin Capital and 223% short interest, people pile in, and that's that caused the FOMO and the slight gamma squeezes and some slight delta hedging that brought us to the almost the $400 range in GameStop and the $72 range in AMC. So they're trying their best to make sure that they don't short them directly, just to keep them within grasp. The moment that these stocks go too high, it's going to get out of their control, and it's even worse and worse. And you're seeing that now specifically because of the new CAT system. They're not able. Now you see the exchange reported short interest has been going up every single day almost for the month of September. It's because of the new CAT system. All right, look at this. The short interest went up, almost 4% there, and over here it went down 0.77. That's a nominal change. That just means they returned some shares. They have to return some shares so somebody else can borrow them again the following day. Another hedge fund. Look at the AMC cost to borrow max. That's now at 4.33%, and the average is at 2.21. So they're much rather going to short the ETFs in London with LIBOR rates of around half of a percentage point for now, until they can no longer do that, and then they'll move to something else. And that's okay. That's their game until their liquidity dries up. That's their game. So I'm sorry if I kind of ranted, but I hope I was able to answer your question to some extent.
No, thank you very much.
Oh, for sure. Thanks, man. I'd love to answer questions if anybody has them. Barrett asks, can we talk more about the CAT system? And you know what? I will say this. The CAT system, AMC Bigums and Wired are the top dogs there. They've been putting out videos left and right. I recommend that you follow AMC Bigums and XX Wired on YouTube and Twitter because they've got excellent information. But basically, it puts like a serial number. So, you got serial numbers like this, like on this pack of cigarettes. You can no longer give this to 100 different people and pretend that it's 100 different packs of cigarettes. You can only sell to one person, and the serial number's right there on the side, the barcode. And that's kind of the same thing. So these shares now, they have to be reported as short interest when they borrow them again, and that increases the Ortex data. Again, Ortex is only 85% of reported interest, but we still need to use all the available information and take it with a grain of salt. Yeah, AMC Bigums, you guys in the chat, has some fantastic videos on the CAT system. He explains it in full depth, and I'm not going to do that here because we could talk about it for half an hour or longer. But so far, it's going to be a fun time.
Hey, boss, what's your YouTube channel?
You can search for BossBlunts. My YouTube channel is BossBlunts / Marcel Klinovich. So either way, you guys can look up BossBlunts on YouTube. That should be the easiest way.
All right, cool.
Yeah, thanks a lot. Appreciate you. You know what? Let's I'm going to switch gears a little here. I don't want to leave you guys hanging, but I've got some information that we've got to share over in Astro's Discord. Do you guys have access to the MILF squad?
Yes, sir.
Yes, I do.
So I'm over there often.
All right. Do me a favor, if you guys want to, let's move on over to the MILF squad, and we're going to jump into the video chat. Make sure you've got your voice muted if you want to. I know they're talking about some fractals at the moment, and I was listening to them last night. We were discussing it for a better part of several hours, and I've got some videos I want to share. But before we do, let's switch on over to the MILF squad, and we'll go in there and take a look at some of these fractals, because I have a feeling they're onto some crazy shit right now.
Oh yeah, dude.
Badass. If you guys need to message me,
Go ahead. He was talking about this professor at Boston U. He found this guy's theorem like involved in AMC stock. That was incredible.
Yeah. It's a beautiful, beautiful situation. In my opinion, today, the 23rd is the beginnings of the extremely hard upward trend. I was expecting it to see it already, but based off the information that we've seen so far, I believe that the time is coming. So let's switch over to the MILF squad if you guys are cool with that. If you are unable to, please message me on Discord. I'll be checking my messages, and I can drop you a link to the Discord. And in a few minutes we'll open it up. A few minutes later from now, we'll open it up to Twitter space calls. But for now, let's go over to the Discord channel for the MILF squad. DD Talk.
Further into the math equation and the theory behind it.
So I'm not saying that like, oh, look at me. All I'm saying is we, as a group, like now that we've all kind of agreed that it looks like a Mandelbrot, and we've identified some correlation between the equation.
Yo. Good mic check.
Equations more deeply. Like there's like 5 or 6 other parts of that fractal geometry thing that there's 5,000 people in this Discord. I mean, we should all be looking into these more intricately, but not by putting. I know what you're doing, bro. I'm just saying, like, we're just wasting time spending or staring at a screen with pictures and laying them over each other.
This is literally the very first thing I did, so whatever.
No, I understand. I'm just like flabbergasted that we're just spending so much time doing the same thing.
It's almost 1 in the afternoon, and you pulled that up at what time this morning? I think is kind of what he's.
Yeah.
Like we could be making serious progress with this. We know where to start. And not to. I'm not like coming at you like that, like, dude.
No,
I'm just saying, like.
Wants to waste his energy like that. Let him waste.
I know.
I like the chart.
I
like the stock.
I get it. I get it, bro. But it's nothing. We have to just accept that that's all it is. It's not. We're not gonna stare at it for another 2 days and be like, wait a second.
I'm not making it anything more.
All right.
Okay, hey guys. More importantly, where's that $41 rip Edward was talking about?
Who's the mathematician? Because that's what we fucking need.
What are you talking about? What are you talking about?
My arm.
We're
Do you see how when I was saying that this when it dips right here, it's gonna be this right here. It's coming up. What do you think is happening right now? Hello? You're judging my. Look at this.
You might be right. You might be right.
Hey, boys.
I mean,
and girls.
you can judge me all you want, dude. But if this rips, you owe me like Starbucks.
Yo, guys, it's BossBlunts. I'm gonna buy you all fucking Starbucks when this is over. Stop picking on my voice.
Do you think Lou?
Starbucks. I gave you the dick.
Do you think Lou drinks Starbucks?
No, you already said.
Where's that mimic guy?
She says he doesn't.
But I'm struggling to connect my mic for some reason.
Do you think I go to Starbucks? Those best fights down there.
There's a pretty good. There's a pretty good.
Yeah, I heard there's a new drink at Starbucks.
Developing.
It's called Mimic.
There's a new Drake and Josh episode.
It's called Mimic.
Oh, funny. You guys are making fun of me.
Well.
Yeah, can I get extra shot
was fun while it lasted.
Caramel?
It was fun while it lasted. It's just I can't look at that picture any longer without wanting to rip my.
Give me 1 second, people. Sorry for the delay. I'll leave you with some AMC data real quick while we fix this little issue with Discord. It shouldn't take long at all.
Seeing how the graph lined up against the image, but without it being an absolutely like perfect alignment that then gives us our next leg up, then I think it kind of stops there.
Well, that and it doesn't go anywhere. Like even if it dipped to hit back the bottom and then go back up, it has no end. So like, if you wanted to do it, you would have to go from like -2 down to 0, because then at least it's accelerating in a higher manner.
Get some HD quality going here and zoom it in here in a second.
Collapse on itself.
Hey, we should get Astro to work with Dave Lauer and that dude from YouTube, Veritasium, so they can crack that math algo.
We need We need his DD. Don't even say that.
Hey,
bucket.
I'm just about to start calling you Wrench for some reason again.
Call me.
What's up,
Brandon?
guys?
My first name's Brandon.
Okay, Brandon.
Hey, Edward.
10 more minutes.
Bro, do you guys mind if I stream this? Gentlemen, do you mind if I stream this?
What's up, boss?
All right, everyone talk at the same time. 1, 2, 3, go.
Holy shit, how many people are there?
Drums.
So retarded. You guys have airlines lost.
Holy shit, you guys. Yeah, they're aware there's a lot of people listening. I don't think they give a shit, dude. This is a private TA DD server. These guys don't give a shit. They're having a blast. They do, this kind of shit all the time.
Stop mimicking.
Let me mute it. I'm sorry, I had to mute that shit because I was still talking.
Right.
They love this shit.
Eat my mandel, bro.
And their technical analysis is fantastic. But no, they don't give a shit. Like, they're not. None of them are being paid here. Like, these guys are making their own money in the stock market. And they're gonna have a great fucking time while they're doing it, just like we all should be. The stock market is. It is, but it shouldn't be stressful. Emotions have no place in the stock market. Period.
Macaroni and cheese.
Show me
GH
what
says
you
all this
got.
excitement and no price action. You're right, man, because we know that the price isn't real. When I see red, when I see huge red candles and short attacks, I get excited because it means more fucking money in my pocket.
Stream that shit, BossBlunts. Stream it.
We're on fucking live. There's almost 400 and something people watching you right now. Let's see some magic, baby.
Question. Marcel, what do you think of Powell's speech today?
Oh man, I streamed the entire fucking Powell speech, man. The guy is scared shitless. They are trying so hard just to say, we did everything we could to warn people, and that's it. They don't fucking care.
Just shut the hell up and let him talk.
I like Page's idea.
Powell is gonna start tapering soon.
Yeah, stop mimicking each other.
Powell's gonna start tapering soon, even though they say that they're not gonna start tapering till next year. It's gonna fucking be like the nail in the coffin. And even if they don't, this debt ceiling is gonna get us. This debt ceiling is fucking gonna send shit wild. I am so looking forward to this. Fucking Jerome Powell could have said anything that he wanted, and it wouldn't have made a difference. The entire stock market was tanking until he started talking, and then it went green, and now it's fucking pumping. It's a joke. It's a fucking joke, man. I can't wait to see Evergrande finish defaulting on these fucking loans tomorrow, on these bonds, because that's gonna send the goddamn stock market into some real turmoil. And
Here.
Yeah, man.
With Evergrande, they managed to kick the can down the road just enough.
Here's the thing: is Evergrande is just like all our other banks. You're right. They're just like our other fucking banks, man. Between Evergrande and all these other cats, JP Morgan, Wells Fargo, Goldman Sachs, you know, it's ridiculous, dude. And it's nice.
Kicking the can down the road. That's all they're doing.
And it's over. This is what I'm telling people is like, we're at closer to the mother of all short squeezes than we've ever fucking been in history. And people don't understand that because it's hard to fathom. It's hard to imagine. But I've been calling this debt ceiling issue since the end of July. You guys have been seeing me fucking shouting it from the rooftops on Twitter and YouTube just because I have no other way to get out to people. Like, this is the only way that I can reach people. You know, and it's like, okay, you idiots, mind your fucking pensions, mind your 401ks, mind your fucking investments, because you're about to get screwed. And if you don't see it coming, you need to open your goddamn eyes and research it for yourself. That's why I'm fucking out here putting this shit out to people, you know?
Amen. Yeah, you better take your freaking money out of your freaking savings.
Dude, I did. All my savings is in fucking AMC and GameStop. It's in my brokerage accounts right now. I got almost nothing in the bank except for what I need to pay bills this month. You know what I mean? Pay my mortgages and shit like that. And that's it. Yeah, all the rest of it's in my fucking investment accounts.
If below 40. If the banks collapse, right, then what happens when you have bills to pay? Do they like undo itself?
Your money, you ain't getting your money, man. You're FDIC insured up to $250,000, and that's it. So you'll get that eventually. But how long will it take the FDIC to actually go through and check out what thousands and maybe even hundreds of thousands or millions of people missing money actually is, and actually give you that money on that claim? You might not see the money that's in the bank for a year.
How does a broker pay you after an AMC squeeze? Credit union?
No, credit unions you need to be careful for, because most credit unions are not FDIC insured. Most credit unions are not. So you have to double check to make sure that your credit union is FDIC insured up to $250K. Just
because I have a Bank of America.
I did too, till recently, till I fucking liquidated all 4 of my Bank of America accounts and moved them to other banks. And
what bank do you recommend getting?
Well, I can't recommend anything, but currently I'm using BMO Harris because they're one of the few that's not extremely over leveraged. Bank of Montreal Harris, and there's a couple other very good banks out there. A lot of good credit unions. I'm sorry, man. I'm not particularly familiar with Cali. I'm from Chicago, but there's probably many banks that you can find.
What do you look for? So you look which one's not over leveraged, or when you're looking for one, right?
That's what I did.
You're gonna transfer funds. For example, it squeezes and you're trying to like transact 50K from your broker because like 50K limit for some reason is like a thing.
Right.
Per day or per single transaction. If you're transferring to a bank, which one is safe that will hold or will give you those?
Hey, that's a transfer issue. You can wire any value.
You can wire any value. It doesn't matter what happens to the banks.
No, you're stealing a 50K is for ACH, automated clearinghouse.
He's right.
Right.
But yeah, he's right. A wire transfer, they can wire transfer any amount, and
no matter what happens to them.
Nothing. I mean, it doesn't make a difference. You know what I mean? Like all it is a transfer of numbers inside the bank account.
Yeah, exactly. It's just numbers. Yeah.
It's all about the clearinghouses. Fuck the banks. It's about the clearinghouses that are. It's what is important. All the banks could fail as long as the clearinghouses can make sense of the numbers at the end of the day. Then, like BossBlunts said, it's just a matter of transferring a number from one account to a different account. Chase Bank could fail tomorrow.
Exactly.
And it's not like money vaporizes or numbers vaporize. It's like, up to the clearinghouse to figure out where that money needs to go.
Right, exactly. And one thing I recently got some clarity about is I was concerned about the insurance policy. From my research, I was under the impression that they had a $76 trillion insurance policy. However, turns out that under further research, the DTC actually is a self-insured organization. When you're that big, for example, companies even like, Enterprise and Penske, like they're self-insured trucking companies. You can be a self-insured organization. The DTC pretty much set up in the new filings that if somebody defaults, the rest of that money to pay retail and other institutional investors will come from other hedge funds and banks. So the DTC has figured everything out to where they've hedged the market against itself. So if all these fucking derivatives on the market go south, it'll just be paid from other participants of the stock market and the derivatives markets, And the DTC doesn't actually have to pay a dime no matter what, no matter how many people actually go bankrupt, because they've calculated it out to the point where even if everybody does go kaput, they'll still have enough to cover it. So that doesn't mean that all the derivatives can go negative at once. It just means that they've calculated that no matter how bad it gets, that they've got enough to cover it based on what's available in the bank. And we all know if they don't, that the Federal Reserve can print out whatever the fuck they want at any moment, so long as there's no debt ceiling, issues. But even still, the Federal Reserve can literally print it. The Treasury just can't pay it. So it's the same thing as if they're printing money. It's the same thing as if it gets paid or not, because it might take a week or 2 or 3, but eventually they will raise that debt ceiling limit and the government will reopen. Or it'd be the end of America and we'd all just storm the Capitol. So, that's not. That's just so of course they will.
They have to.
They will. But here's the thing is, it's going to wait until after the market collapses. They know the bubble that we're in. That's why all these fucking insiders in Congress already sold all their blue chips, and because they know what's coming. They get out of their fucking positions, pop the bubble in real estate and the stock market all at once, and then they can re-enter because they just made a shitload of money because the S&P is at all-time highs. So it's very easy for them. So McConnell did this in 2013, Mitch McConnell, with the debt ceiling crisis. $2.5 trillion was lost in one day. And that lasted all the way from September 15th through October 9th. That started on September 15th when they started talking about it, and that they came to an agreement with Obama and lawmakers on October 9th. And that erased trillions and trillions of dollars from global equities, from the stock market. The SPY lost like 8%. I can go on and on giving you examples of how shitty it was. But it's the same players doing the same thing, but our economy's in much worse situation, and we've got COVID, and we've got supply chain issues and hyperinflation and printing of money that we've never seen before, and the highest derivatives, $184 trillion that we've ever seen in history. So on that note, they're fucked. And I need to take this call. I'll be right back. Business calls. Thanks, guys.
At least we ended at 40.
10, yeah. Dude, look at this bullshit. You guys see this?
Banks can limit you on how much you can take out.
Guys, look at this. This is garbage, man.
Hey, speaking of kind of shortages and stuff like that, have you guys seen stuff about the shortages of truckers and trucks?
You know what that's gonna bring? Shortage of food and water.
Exactly. So, the Obama era, they basically passed this EPA law that finally affected the trucking industry on diesel trucks. Basically, there's a sensor that has to be inside it's called like device exhaust fluid system or something to that effect. It's this chip. It has to be in a gas tank that has to read whatever the fuck it reads. However, like the quality or level of diesel exhaust that comes in and out, right? Well, there's a chip inside of that that's usually only good for about 6 months or so before it needs to be replaced. Well, as we all know, there's a shortage on these chips, and it's literally causing fleets of trucks to be parked because they can't get new chips into these. So it's not even like there's just the shortage of truckers, which exists. There's a huge shortage of truckers. There's a huge shortage of just trucks to be able to ship anything around. And it's starting to be. What used to happen was the chip used to cost about $300. Now it costs $7,000. Imagine you're a shipping company, right? And the price of this chip for you to maintain your fleet of 2,000, 3,000, 4,000 trucks just 10x in a matter of a couple months because of chip shortage. I mean, it's literally it's grinding the entire shipping industry to a halt.
This is why you can't get graphics cards.
Yeah, chips, every chip, whether it's
they're shorting it on purpose. They're shorting it on purpose.
Hey Ed,
what's up, bro?
Did you want my Cash App or
what?
Run up.
Are you talking about the auto shortage?
That's the OnlyFans.
Because
I said if I'm correct, I didn't say if you're correct. I owe you Starbucks.
Are you talking semiconductors for the auto industry? They use way old size microchips. I'm talking like 40 nanometers and not going to modern sizes like 10 or 12. It's a tooling issue at the factory level.
But so it's not a supply issue; it's a tooling thing. Is that what you're saying?
Yeah, because they gotta, they gotta change out machines, and they don't want it to the old process because their new processes are going to be developed. I just read, an article on this. It took me an hour.
Yeah, they're just
all new trucks.
Guys, you know what's crazy? All of this is politics, whether you like it or not.
It's all mad course.
Okay, if you have an airbag sensor that's 1.5 inches across, and it can be replaced by a sensor that's 1/4 inch across, they're going to want to use the 1/4 inch one instead of tooling back their machines to go back to the 1.5 inch size sensor. Or, I'm not sensor, microchip.
Yeah, no, it's
Also, the problem with that is to build a chip plant, it takes many years to get the equipment, many years to build the place. You can't just throw a chip plant up over a year. It takes a long time.
Right. So mid 2020, auto demand dropped. And so they switched to at-home devices, micro cell phones and whatnot.
right. Yeah, I'm seeing here that trucking dealerships are reporting getting a daily allotment of 1 chip per day. So, if you're a trucking company and
true.
imagine you're international and you're building
what
10,000 trucks a year and you're only getting 356
They
chips.
only have so many, and they got to split them equally because everyone's paying.
Dude,
so in order for it to be fair, they got to split it equally. So very few cars and trucks are being manufactured right now. That's why it's causing new car prices and used car prices to skyrocket. 37% increase on used cars due to inflation and supply and demand issues.
And it's gone. It's gone.
That shit worked out well for me.
Just see AMC just now.
What's going on?
Look at AMC.
Let's see that shit.
It dropped to 39.77 and it freaking went away.
77. It went to 39.57 or something for me.
Nothing to see here.
No, it was 39.77.
We're in aftermarket hours.
Yeah, we're in after now.
Nothing makes sense. Yeah, it doesn't make sense.
That's true.
The volume is so insane. Nothing makes sense. Pre-market or aftermarket, really.
Oh yeah, but you know what's not manipulated? Actually, this is actually still manipulated because no matter how many apes are trying to short this, well, guess who's winning?
Me.
Well, not me.
Freaking hood,
I'm fucking winning,
12% up, and it's still going up and winning.
Marin?
So stupid.
MRIN, you guys were talking about last night?
Opposite of AMC.
So where's our 51 or 41? What happened?
Yeah, this is called naked shorting and manipulation. You guys see this? Like this? Hold on, let me show you. Do you guys see how we're always this is the evidence we're getting close? This constantly is making copies of itself now. This is the same tiny on the daily where the event horizon has been met of this crap right here. It's constantly making copies of itself.
Go to the 4 hour.
It's like
it's disgusting, dude. It's disgusting.
Oh, there's two of the same right next to each other.
Another one.
In between yesterday and today, there's 2 copies of itself.
Where? This?
Yeah.
It's running out of the.
Even today.
It's disgusting.
Descending downtrend.
We're looking at fractal cycles here.
To the point of
This is like the June, the after June math, except the W is like flipped over now.
Do I have a voice changer?
So stupid. Wow, dude. Another 1% after hours drop. Wow, what gives, man? What gives? Like nothing but selling in after hours. Somebody's like, oh, dude, I'm excited. AMC is about to be so good right now. Time to drop in, gain 6.62%.
Can we draw some more fractals on it and stuff?
After hours does not matter. Like it doesn't. It just after hours and pre-market just do not matter.
Really?
No, they don't, man.
Nah, they're
it just
bullshit.
There's no volume to it.
It's all manipulation.
No, you're wrong.
I don't.
Let me show you.
I mean, the volume does
yes.
matter.
Show me.
It's just not
When did this
imperative.
happen, by
Yes.
the way?
Alright.
When did this happen? From 54 to 71, 7.6 million volume. They suppressed it into after hours because if this happened from here, we would be at 100 on June. This would be at 100 when FOMO would kick in, even harder. They put it in after hours so people wouldn't be able to trade. And guess what happened the next day?
Cut its profit outlook for the year as a result.
You can't make this shit. Look, 394 million volume and it dropped from 62 to 37. They opened the market and they shorted the next day. They put it into after hours so people can't buy it. This is literally
We got some crazy echo. Somebody needs to mute.
FedEx. I mean, so many.
Guys, this is worse than Robinhood and all the other things. Removing the buy button. This is worse.
Yeah, I mean, look,
they do this every day.
Is $1,000
They remove the buy button. This is what after hours is. After hours is like the big.
Into the Apple Store physically if they're worried about.
That was bad. I'm sorry, everybody. I had to close that out.
Warning that the new rules.
I know you guys had a terrible echo. I was trying to shut that thing up. I had to close the stream. I apologize. I'm going to open it right back up here in a second. That sucked. Biden calls Democrats to the White House as the party splinters. I think you all know what that means. Here we go, launching the Discord one more time. We'll be right back into it, don't worry. We're about to start talking fractal cycles and what they call Mandelbrot. Here it goes.
Tomorrow.
This is the dumbest thing ever.
We have broken into the Matrix.
Marcel, your stream sounded like an auction.
Dude, that was hilarious, right?
Yeah, it was fucking funny.
This shit was hilarious, dude. Yeah, I had to turn it off. I had to like get out of here so not fuck things up.
Oh man.
Hey,
That
so
was great.
Edward,
How
what
do we
were
enter
you
the
trying to
Matrix though?
Get at, man.
Huh?
Let's go over here.
Running out of time. What's your, I guess your bottom line up front with that?
It's running out of time for the shorts because the shorts when they play this tunnel way where they're trying to control the price through suppressing volume and using dark pools and high frequency trading, this suppression in between, this bloated suppression, if the computer algorithm takes in stuff and then it tries to fix its own other computers that are connected with it that process the trades. When it runs out, well, this is what happens. It like suppresses them. So what's going on here is running out of time for the shorts to play this game that they're playing with putting into dark pools. Eventually it will track it and it will launch it up again.
Yo, Marcel, can you tune into my stream for a second?
Yeah,
I think
absolutely.
this is a really
Zabi?
underrated video.
Zabi,
Yeah.
I got you, brother. For sure.
This is a really fucking underrated video, and this is like explaining how the algorithms work. All right, I'll play it now in 5, 4, 3, 2, 1.
Let's go. This looks fun. I think I know which one you're talking about. I think you were showing it to me earlier. But I want to see this.
How many tabs do you have opened?
Millions.
And are able to buy and sell stocks either fully or semi-automatically. Some of these trading programs only perform simple.
Let me turn the sound up a little bit here on my end.
If grain falls below a certain
Adjust the sound a little bit higher, Zabi.
Number of grain stocks.
A little bit. Don't blow my viewers' ears out. There's almost 500 people watching. Plus the hundreds that are in this fucking server right now.
Wait, it's too high?
No, it's good. It's good. Turn it up a little bit.
They're nothing compared to custom-built, high-frequency trading computers. The trading programs installed on these computers can independently pursue complex strategies with incredible speed. These programs compete with and battle one another to ensure they don't run the risk of losing.
How and why?
Have to be faster,
AMC,
more
how and why?
And more independent. What was previously
they're talking about the algorithmic trading.
Hours and minutes is now bought and sold within seconds, milliseconds.
Hey Zabi, are you here?
Yep.
High frequency traders.
Hey, you remember those lines that you were showing us yesterday, and they hit the top.
Market transactions.
Hold that thought, brother. Just hold that thought a little bit.
Yeah, hold that thought one second.
High frequency traders' basic strategy is very simple: trade as much and as quickly as possible. The profit margin on each transaction is frequently quite small, but these small amounts add up to billions due to mass and velocity. High frequency trading may have advantages and disadvantages for the markets. Disadvantages include the fact that normal traders cannot match the speed of the high-frequency traders. Because firstly, not everyone could afford to rent space close to the market. And secondly, they cannot always pay for the specially programmed
5% after hours
trading algorithms.
Hey, I didn't want to distract you guys from AMC, but have a look at ATER and tell me what you guys think where we might be in that fractal.
Novel high speed and the lack of regulation are often exploited by high-frequency traders to manipulate the markets and deceive other market participants. One example here.
I can't even think about it. I already YOLO'd.
To continually stay one step ahead.
I told Brutes about it earlier.
To slow down all
if you look at the 1 day.
This happens through so-called quote stuffing. In this scenario,
look at the 1 day. You have the 30-minute on there.
I know.
Oh yeah, no, that's cool.
A flood of information. And filtering
I'm sorry.
Information, other programs lose valuable milliseconds
that is not
too late
to
interesting offers.
ATER, Iterian.
Another manipulation technique is called
spoofing. Please. Yes.
For example, a trading program will generate a number of overpriced purchase offers.
Should see.
Thanks to the extreme speed.
Wrong with your scale. What is wrong with your scale? That can't be right.
Before anyone purchases them.
What do you mean? What's wrong with my scale?
Offers are nevertheless seen. This creates the illusion that a number of dealers
doesn't look like that on
in
my end. What's your time?
Candle.
Yeah, it's your candles. Are they 1 day candles?
Guys, I know I was muted. I was on the phone.
No, this is Akindashi.
The spoofer can now use previously acquired options bought at an unmanipulated price.
Different from
significant
run up
risks.
And then came back down.
Programmers say that due to
and now we're
doing I see why.
Environment and
okay.
Algorithms themselves,
are you doing logarithmic?
No
here we go. See,
the programs do. And of course, these programs are never completely error-free. This leads to problems in the interaction. For example,
it looks different.
It looks different.
Yeah, because why is it going up to $40? Go back. It never went that high.
Hey Zabi, can we put the pause on that video for a little bit, brother?
It never went this high.
That's a great video.
Went to 40.
Can you share the link with me so I can put it up in the chat? I mean, in the live chat over here.
Yeah, it's pretty long. Sure? 30-minute video.
That's cool. Yeah, if you
on
can
February.
Share it with me.
Yeah. Okay.
That way I could share it with everybody and people could go and watch it also, the whole thing without us talking over them because it's great information and that was a beautiful snippet of the way like payment for order flow and algorithmic trading works. So I think some people might want to learn more about that.
Bro, it shows $48.99 on February 17. What do you mean?
Pete,
it's
I'm
not
not
correct.
Sure if I'm streaming tonight, but thank you all for your support.
All right, just zoom in on recent, like the 1 month. Oh, I see what you've gone way back. Okay.
Yeah. It shows the like if I zoom out. Yeah. I see what you're saying.
Yeah. Okay. Yeah. Sorry. Yeah. I get it now.
Just for those who are unaware.
Yeah, but this section right here was.
Just for those that are unaware, we're currently about to discuss fractals and future cycles, IMM dates, international money market dates, and these guys are onto some really interesting things. We've been talking about this for weeks, and they've really got it nailed down now, I think.
Zoom. Keep zooming.
But again, this is live
section right there.
live
Looks
due
like,
diligence.
That looks like
in
January.
which
Hold on,
check this out. Right now, we're predicting the future.
It's
hoping that
it's
predicting the
popping
future.
off this previous. It got actually they claimed the part here. I think the next one's gonna pop off from here. It looks like AMC in January. You said.
Yeah, where it's going to come back down and try to form the first Dorito down below. Like we look like we're on the way to a Dorito.
I don't think so. Hold on, let me. Looks like AMC to June, and this looks like June coming to June. If you're connecting it to AMC.
Yeah, I mean, but look at the January. Look at the January run. The very beginning of the January run.
Yeah.
Now zoom in on the bottom. Yep. Now zoom in on Ader.
Oh, zoom in on later. Okay.
Oh, goddamn phone.
Okay, I see. Yeah, it could do this weird carrot thing.
No, I'm thinking the very beginning of the run, buddy.
What's with you and carrots?
This.
Yep.
So you're saying this, or this is right? This is right here.
Yeah.
It's consumer electronics.
It can't.
Or
be
no. Actually, I'm sorry. It's those 4 days stretched out into a week right here. So the very first part of the run. Nope. Zoom. Make the top wider.
Okay.
And scoot it over. Wrong way. I mean the very first 4 days of that run on AMC.
Okay, I see what you're saying.
Yeah. Okay. So see how it does. Well, yeah, you're super zoomed now. All right. See how the giant candle, carrot, or the carrot as you like to call it, that, and then drops down. That's the next red candle. So look, it's the red candle there,
Okay.
and then it shoots up. But like it did that for 2 days on AMC, whereas it's done it for like 5 days on.
Oh, I see what you're saying. So if I do, hold on, if I do 4 hour.
Where they stretch time out, right? Again. And then it's going to do the drop down because it didn't.
So you're saying
the latest green candle did not supersede or extend beyond the first run up. So if it does not break the top of that other candle, it's not going to, and it's going to drive it back down again.
I see what you're saying. The issue I have with this though is that it's for it to be for it to show a downfall, it would have to be like slapped right here where the resistance began, right?
Okay. All right. Zoom in on June now. Up above on AMC.
Here?
Just stay right here on Ader.
Okay.
Zoom in on June. Scoot it over to June. You're gonna have to scoot it, not zoom. I'm sorry.
Scoot over to June. Okay.
Yeah, scoot over to June. So, because I always have trouble working with January.
Okay. No problem.
Because January, got fucked.
Yep.
You gotta keep going.
Oh, keep going.
Yeah, June. Where are you?
This is June right here.
Oh, that's a June one. Oh, my bad. Oh my god. Fucking eyes. I'm sorry.
You're good.
So see how that bowl took like a lot longer?
This one right here?
No, the first bowl.
This bowl? Okay.
Yeah.
But you see this bowl from here to here? This is low of 45, and this is the high of 72, right?
Yeah. It never came up. It never came back up to beyond 72.
Right. It got clapped. Here is a totally different story.
Why? I mean, it got clapped right here. After
right,
hours,
but it's more than 70. It's more than 80% retraction.
Jeez, after hours is at $18 right now.
Yo, take a look at BlackBerry. All of a sudden, it's like up over $1 in the last 5 to 10 minutes.
Oh, what's over $18? This?
Yeah. Hey, AMC's going up too. So fuckery, complete fuckery.
Rippy.
Is it really? Hold on, let me see.
Yeah, after hours. How do you keep getting the wrong? No, that's AMC. Oh, sorry.
No, yeah, hold on.
You got AMC in both.
Come on, bitch!
You're
Black
confusing me.
Barry has earnings today.
So 1870 still hasn't broken the previous run high.
I'm
So
telling you, this is gonna hit
ATER.
4057. It's gonna hit 4057.
It
AMC.
better, because you're gonna be out a lot of money sending all that money to us. So here, I mean, I don't know. I mean, it feels like if this 1870, if this doesn't break 1910, then it does not break its run. Well, it says 1990 on yours. Where
No, it has to break this right here. When it got.
wait, hold on. Where?
It has to break 18. Where's the center? 1882.
No. It shows the 1990 as your high point right there.
It doesn't matter the high point. It has to break 1886. This is the resistance point when it started to get shorted. It tried to come back up and it got shorted again. This is
Time and time
1886.
again, you'll see it where if it doesn't, it'll, like even today, I watched AMC did it and it came within a penny of the fucking high and then retracted back down.
Want to know why? Look at this. Look at this. This is the perfect example of a breakout. See this? It's the center point where it breaks it, comes down, goes up. When it passes over it, it comes out of it. It breaks it. Right, it breaks out of it. It's the same thing that's going on here on a larger scale. You have this cup that's being created. Now what's next? Look at this. It hit 1870 now.
It's going to create the handle now, so it's going to retract.
It has to hit 1880. 1886. Sorry, 1886, I believe.
That's my argument. I'm sticking to it.
1868. So if it hits 1868 and it passes through, this is a bull run.
Okay. Keeping an eye on it.
Yep. And I'm telling you, because this, if you look at the AMC chart, and you can see the same thing going on here. You see this? See that? You see that repeated pattern? Look at this, 1872 now. It just broke 1868. And this is on a bull run.
Shit.
It is following, dude. I could tell you the logarithm behind this thing, but it's repeating the same fractal, and this is going to pass its previous resistance of what's the center? 1798. If this passes 1798, it is going to explode the next day, maybe even after hours. 1798.
Oh wait.
So apparently it's 1788 is the center. This is the center point. This is creating a cup handle, and there's going to be an explosion. It's the same thing that's here created. Cup handle explosion.
They definitely got margin called. I'm joking.
Let's see this.
Not financial advice.
What happened to Naked, by the way? Because I saw Naked going up. Oh God! Welcome to barcoding. Anybody want some watermelon? What are those?
Holy shit, that's beautiful. Look at this. See, people, this is why we get excited over red price action. Look at this incredible fucking after hours volume. Look at this nastiness. This is not an accident. Okay, this is not an accident. This is not manipulated. This is straight off the fucking charts. What are you using? Weeble here? Looks like.
Yep.
Jesus Christ, people. Get your head out of your ass if you think that this is, if the short interest is real. If you really think that only 20% of the short interest is in on these stocks, I don't know what the fuck you're doing on these plays, to be honest with you, because it could not be more clear that they are so desperately shorting the shit out of these things, that these things are being run algorithmically. These IMM dates and future cycles have been the most clear-cut thing I've ever seen to associate with the volume volatility altogether. It's the most clear-cut forms of market manipulation I've ever seen in my life. It's craziness, and I love it because it can only go on so far. Holy shit, look at this. Watermelon. That's a good analogy, brother. I'll let you take it from here. That's fucking awesome.
Every single day, dude. This happens every single day with Naked. Look at these dots. This looks like one tick. You want to see one tick?
Yeah.
Welcome to Matrix. This looks like the Matrix already happening in the freaking after hours and pre-market.
Exactly, and that's why this is the overlay to my fucking channel, because we're in the goddamn Matrix, and the shit's broken. It's about to fucking break at any moment. It's beautiful.
Yep.
Zabi, I'm not gonna be on for long, but I wanted you to take a look at this real quick. I'm gonna real quick.
Okay.
That way you can see what I kind of ask you. So you remember yesterday you had like these lines, like there were these like black lines.
Everyone was dissing me today.
What was that?
I don't want to interrupt. I do want to show you guys that somebody has just posted an article on September 22nd that it is imminent that China will, the Chinese Communist Party will seize control over Evergrande Bank. And that is exactly what we have been predicting. They are going to fucking take over all of Evergrande Bank's assets and pay people in apartments and pennies on the dollar for the debt. Interesting times.
Do you remember those lines that you were talking about yesterday, Zabi? Or I don't know. I don't know what those lines were, but this is a MACD. So what I'm saying is, imagine if you could use a MACD underneath, and you could see if it correlates, and it stops with the MACD. Do you understand what I'm saying? My theory is that whenever it's in these like black like masses here, that it won't respect that because it's conforming to, it's controlled and it's conformed. But whenever it exits, there's a possibility that you might be able to see the bifurcation points with the MACD and the exit. You could kind of see where the exit will be with these lines here. You know what I'm saying?
Yeah.
I don't know if I'm explaining that right.
Well, where are those lines from exactly? Oh, okay,
So
52.
this is the moving average. So this is like 30 lines here will come out. Just like you had lines all over your screen. I don't know what that is still to this day. What was that?
That was just a chart. That was a daily chart of AMC.
Bro, what the hell is this stock?
Flip, thank you so much for your support, brother. Thank you for your donation.
It's also Max Payne. 43 is Max Payne.
Toast? What the fuck is Toast?
It is up 53% today. It just opened up.
Toast is an IPO. It's
IPO that just came out.
It's like where you pay at at your table at a restaurant. They make those little kiosk things.
Oh, you gotta watch this shit then. It's gonna definitely drop down and then bounce back up.
This is what happened with Dutch Bros. Look at Bros, guys.
JT, what are you doing? You're on some next level shit.
Damn.
So
Edward.
what I'm trying to ask you is, yesterday you had some kind of like indicator or something that looked just like this, but it was black and it was black lines, and
Yeah, I can open it up for you.
Well, yeah. So where did you get that image from?
I found it on good old internet.
Okay, great. What exactly is that?
That is the Mandelbrot, except like just like another view of it. It's the same equation, just like different.
Hey, you guys, take a look at BB BlackBerry. BlackBerry's running.
Yeah, scroll down. Dude, BlackBerry's running?
Fuck,
yeah,
man.
take a look at it. It's up 9.6% in after hours.
Right now. Bro, it's happening. It's happening. The fucking the smaller ones are going, and then oh my.
The little one's gonna go first, guys. The ones that are not shorted much, like BlackBerry and like MRIN. Okay, they're the ones that are.
MRIN was up 90% up today.
I know. We were watching it at like 3 in the morning together, all of you guys, and I was with you guys, like just kind of like listening. It was awesome. It was up at 10.58%. Look at that, guys. See, so MRIN. Marin Software, another heavily shorted stock, but much less so than AMC and GameStop. Now, BlackBerry is fucking running 9.62%. It's like AMC and GameStop are going to be the last ones to run, and they're going to run the hardest.
For sure.
I think it's going to be AMC then GameStop. That's just my personal opinion.
I think so too, but I think that's natural. That's normal because I think, in my opinion, they started shorting GameStop back in 2006.
No, but
and then AMC
I'm looking
like
at
in 2012 or so. So they both have been
they're on the
for
Mandelbrot.
More than 15, 20 years. But you're right. I do think that GameStop's been shorted a little bit more, especially considering the lower number of shares. But dude,
JT, I sent you the link of that picture you want.
Awesome, thank you.
What's up, BossBlunts? It's Wizard.
good having you in the Discord, man. Appreciate you jumping in and all the work you've been doing for it.
Oh man, thank you guys. Like I'm just trying to do my part, and here you guys are all doing your part. So that's why we're an awesome community, man. You guys are incredible. Thanks so much for letting us share this with people. Because, like I said, there's almost 500 people in here right now, and then there's hundreds, maybe 1,000 plus over in Astro's stream too, watching this shit. Like we need to get this word out and show people what the fuck's going on, because otherwise they're just gonna be running around believing what CNBC is telling them on the goddamn news. And Flip 1967.
One thing for sure, we got some big brains in here, man.
What I think's going on is this is like the universe trying to balance out, I guess. And
nothing better than a bunch of people coming together.
It's like a correlation of all of our intelligence.
Thanos snap.
Well, I don't know if it's Thanos snap, but it's basically like it was destined to be almost. It sounds weird, man.
Guys, that's the word. That is the word. It's called destiny.
Yeah, what's up?
The CCP taking over Evergrande's assets. What does that do for their current debt owed abroad?
Not a whole lot.
It destroys them. It destroys them.
Yeah, he's right, because Edward, right? Edward said that?
Yep.
Yeah, Edward Bridchick. You guys need to follow this guy on Twitter and everywhere else you can find him, because he's they're all these cats. I put all your names up there at the top. Edward, Zabi, Beef, Charlton, and everybody else. I'm going to put you up there as well. That. Please follow these guys on wherever the hell you can find them: Twitter, YouTube, Discord. But the Chinese Communist Party taking over Evergrande Bank tomorrow potentially means that they're going to tell all these other banks to go fuck themselves. They're going to pay them 10 cents on the dollar. They're going to take a shitload of these apartments, and they're going to pay all the Chinese people in apartments, and they're going to take all the rest of them and keep them on their asset books. So they're going to make an absolute fucking killing, and they're going to make their people more poor, and they're going to take over all that real estate for the next 1,000 years.
So how's that going to affect our market, do you think?
Guess who owns Evergrande Investments?
HSBC, who is owned by Citadel.
No, BlackRock. And guess what BlackRock is going to have to do tomorrow, or whenever this thing happens? Recall the shares that they lended. Guess what's going to happen to the shorts? They have to buy those shares off the market, all of them that they were buying to short from BlackRock.
Can we say thank you, China?
Yeah, it's like corruption literally gets exposed by the light. That's what's happening.
So how's that going to affect?
Look at this run. Look at this run right here.
SPY.
Yeah, you made it 3D. What the hell, JT?
So it's the illusion of 3D. So it's
I know,
image
but
over
like,
an image. Yeah,
fuck, yo, holy shit.
Let's see.
Who did you say owns Evergrande?
Not owns.
BlackRock owns Evergrande Investments. Investments, not owns Evergrande. They own investments in Evergrande.
They own you.
BlackRock is one of the biggest firms that owns investments. And they are the major bitch that literally lends shares to the Citadel and all of these asshole shorting
Fuck all those motherfuckers.
Pieces of crap. By the way, Simplex does not own.
That's not true, yo. BlackRock is not the #1 lender.
Well, they're fuckers.
No. They are one of the primary.
Piece of shit. Fuck them.
Yeah. And Simplex just has a bigger short position against AMC. Simplex can go fuck themselves.
Everyone should fuck
themselves.
Hey, Susquehanna's up there too, aren't they?
Did you guys see the news? Did you guys see the news?
But there's dynamics that we don't understand. Like BlackRock, maybe they had to do it was the best, because they had this leverage over them. Now they can recall this many more shares, and
No, they're done. They're done for.
Why would that result? I don't think they're done for. They own like $418 million worth of bonds in the Chinese market, but they currently have like a $50 billion portfolio. So you're talking 1% of their portfolio that they may not get back. I don't think they're done for at all.
No. They're done for lending shares out. Is what I meant.
Maybe. Right. But why would that result in the short?
Because the shorts, borrow their shares have to cover them.
But what are you basing your hypothesis that they're going to recall all their shares on?
Because they have to pay for the position. The investments of Evergrande is tanking, and they,
No.
they
So
have major investments.
they already own, but they already own those bonds. They've already purchased those bonds. So
Those bonds are about to be zero.
Right.
Yeah.
So they lose out.
No, they don't own those bonds.
At the end of the day, they're losing liquidity, and that's his point.
Yeah.
Liquidity is dropping. You guys have seen crypto
It's
dropping.
such a small
for a reason.
percentage, though.
Right, but again, you're talking
Bonds
1%.
worldwide go negative for a reason.
That's
and
nothing
that's
to
what's going on.
BlackRock, though.
When bonds go negative, hedge funds are fucked. Okay,
Yeah,
Japanese
yeah,
bonds are negative
CDOs
now.
and CLOs.
German bonds are negative now. Australian bonds are now negative. Euro
Yeah,
junk
they're
bonds
they're
are negative.
negative. They're gonna owe money.
You know, it
They're gonna
should be
owe money.
negative. That's not is the fucking HYG.
For now.
How is
For now.
HYG continuing to jump? How did they just jump up $1 over the last day? 'Cause my foot went way the fuck down. Insane.
How does the shorting? How do they make this shorting? Look how it moves. You guys see this? How it moves so fast.
I'm not seeing that.
What?
I'm not seeing that on Fidelity.
Look how fast this thing moves.
That's AMC, right? It might be them balancing their books.
No, man.
So I'm not seeing it at Fidelity at all. Zero.
That might be their second book.
Remember the June run up? It started shooting up green. This is the opposite. This is like them. Oh, have dark pool orders? No. Sell. Process only the sell orders and let the buy orders through. They're literally trying to make this after hours 0.00%. Look at this crap. Every single buy order that's trying to get through.
4011 is where I'm at right now. Where are you at? You're at 4009. Yeah.
Yeah.
And
4010.
Yeah.
We're looking at the volatility.
They're trying to push it to make it zero. They're trying to push it to make it zero.
iShares.
And the ask is 4020. I think
this is disgusting. It keeps going back to zero. Every single one, it keeps going back to zero.
God damn it,
This
Gary
is the
Gensler.
stupidest
Where's
thing.
our fucking whistleblower money?
This is
Beginning of the
disgusting.
end, boys.
That's fucking right, man.
I whistle. I can whistle.
Those motherfuckers, dude. Fuck those.
Every time it tries to pop out, they just put the sell orders in, and it brings it to 0.0%. Every single watch 0.10. Watch them bring it down to 0.0 again. I kid you not, they're gonna do it. Come on, show your manipulation. It's so bullshit, man. Oh, now they're like switching the thing. Now they're like switching. Oh,
You know you're looking.
look at this. 0% on MMAT, Mara, 0% on XCLA, 0% on Workhorse, Oxygen 0%, and everything just flipped green. Every one of them are run by the same bullshit, dude. Every one of them.
Well, we all know that it's close now, so let's save our freaking out.
Hey, Thunder, how are these
Wow, look at this, guys.
How's this coming out?
Well, so much.
So BossBlunts,
So
right
much
now,
for
I'm just
that.
trying to correlate the MACD with a possibility of what these lines are. So this is all theoretical. I kind of want to show you though, like the black hole theory for your viewers to get a better understanding.
Yes, please, because we were talking about it yesterday, and I swear to God, I recorded it to myself, but I did not share it with anybody. So I would love it if you would explain this again.
JT, you'll do a much better job at explaining it than me.
It's okay.
Oh, you guys did a great job explaining it yesterday. Are you kidding me?
It's a very difficult thing to kind of like put into layman's for like people that don't really understand like what's going on as far as like mathematics is concerned.
Booga booga.
But that's okay, dude. Hey, it's okay. I haven't
We
taken a
bunch of
math
eights.
class in like fucking 20 years, so
Me too,
I
man.
still have no idea. Dude, I barely remember the line equation. So we're chilling.
It doesn't change the fact we still love you.
I don't remember logs.
Bro, I have
Where am I at?
Fucking bachelor's of
Speak
science
for yourself.
and mathematics.
So damn, there's a lot of.
You guys make me look retarded.
All right, guys, I gotta edit my films. I'm so sorry.
You still haven't done that?
No, no,
It's
I've
cool,
been.
man. We understand.
It's all right, man.
I'll
I-
catch you guys like
no
later
worries.
today.
You're a
I
busy
had to
dude,
help my
man.
first grader in math and
All right, take care.
All right, so I'm ready now. Okay, so
wait, who are we watching now? Jumping
So,
all over the place here.
I'm just gonna go over like the black holes, like for in layman's, for people that could kind of see what's going on and what we really mean by like a hyperbolic move from the epicenter. So this is like the Fibonacci golden ratio. Come on, damn it. This is essentially possibly the next run up. This is all hypothetical though. But we're gonna use these two the data points from the last two run ups to kind of get to this idea.
Zoom in a little bit, brother. Thank you.
Yeah, so we're zooming in here. So this is January 27th, and we got this by using Pythagorean theorem at first, and then mind the circles. They're off center. Where are we at? God damn it, dude. I've been moving this all around, so it's kind of been screwing up my.
Sorry, no worries, man. You take your time, brother. This is not simple shit, people. By the way, right here we are discussing hyperbolic movements within Fibonacci golden ratios. We call these event horizons, black holes, fractals and cycles theories. This is all based off, a lot of it's all based off of mathematics, and the majority of it's based off of Pythagorean theorems and these Fibonacci sequences and all sorts of things that these market makers and hedge funds have come out to create algorithmic trading. So there's volume, of course, that has to change, and the way that the volume volatility affects the price action is very distinct and creates what we like to call cycles. I guess that I don't know how else to explain it. I'm sure these guys can explain it better, but for those of you that are watching right now that don't understand what the hell's going on, that's the best that I can explain it and my limited understanding of this subject. These guys are way better at it than I am, and one of the best things I've learned in life is always get someone smarter than you to help you do the things that you can't. So thanks so much, Thunda, Zabi, Edward, all you guys. I don't mean to miss anybody. I just have all your names kind of smaller at the moment. So thank you guys so much.
Yeah. Thanks for allowing us to
zoom out.
kind of explain to what we're doing to your community.
I'm going to zoom out because I would like people to see you. So absolutely, man. No, it's my pleasure. We got you guys can see their names up here right now. Hey, we got Thunder, Chalden, Beef, Aus, Jay Thunda. All right, Mr. Beefy. We had Edward Britchick up here a moment ago. I've got all your names put up in the description and in the chat right now. Go ahead, brother.
There's like 100+ people in here.
There's 530 people in the live chat right now.
Yeah. All right, great. So basically, this is the golden ratio theory, and like it relates to Fibonacci, the Mandelbrot set, and also Pythagorean theorem. I'm sure there's other things that factor into this, but we haven't found them yet. So at least on my side, I think producer Welch also has some other things going on with like the Riemann sphere and stuff like that. I don't really know about that stuff. I haven't really looked into that. So this is the golden ratio. These are two flipped on each other, and we're kind of putting them at the base. Forgive me, it's not going to be exact just because I think I messed up some of my layers here. But so we have a January run up. So we went from 191, and we got a right triangle, and we went up to the top of the run up. Let me kind of move this up, and we got those 2 points, and we put this here, and we started. That was where we started at. And then we got into like the golden ratio, and we saw that the golden ratio actually lines up with the top peak. It doesn't really line up here because there's a very minute part of the bottom that is not lined up. I'm not going to get into that just because I probably have to make a new diagram, but it's okay.
Yeah, it makes sense.
So the next one we see, this is the golden ratio here again, and that's the epicenter, and we'll see that it pretty much lines up with the top of the run up. The other thing too is we also did our triangle again. Boom, boom, and to the top of the run up. And then I started creating this typical like pyramid because that's what I started seeing. I think this is all theoretical. I think this part of the pyramid is cycle 1, and then this side is cycle 2. And if we looked at the numbers, we got 126 days, 87 bars, and a 46-degree angle. On this side, I have 125 days, 87 bars, and 133-degree angle. Now, if you were to add this number up, 133, 133 with 46. Let's do that real quick. Remember,
well, 180.
Welcome to the Matrix
yeah,
5.
it's about 179, right?
Right, exactly. Yeah,
So how many degrees are in a triangle? There's 180.
Yeah, it's
I mean,
no, it's in a hemisphere.
In a hemisphere? No, I'm talking about like a triangle, like the angles of a triangle.
All added together make 180.
Yeah. And then you know, I'm pretty sure there's other math that you could do to further justify the equation. Okay, so I'm gonna now demonstrate what happens when we get to the epicenter and why these run-ups occur, and why we're gonna visualize it now for you guys. So here, I have. Is my screen okay for you, BossBlunts?
It looks fucking great, dude. Yeah.
Okay. So so notice. Sorry, I'm a little zoomed out here. I know that you guys get a scrunch version of this. So right here we have. Think of it like a galaxy kind of spinning, and this is the black hole, right? So we're calling these black holes, and it's spinning here. Now watch what happens when I spin and I go towards the epicenter. So I'm moving my cursor. My cursor is right here. It's gonna be on the bottom right, and then we're gonna move up. Okay. So think of this as AMC price action as it runs to the epicenter, and I'm not trying to accelerate my cursor. I just want to get to the epicenter. Notice the violent move here. How quickly it rotates as it crosses the epicenter. This essentially is the AMC price action visualized once it hits a certain threshold. So this is why the run-up occurs. I feel like this is
That's beautiful, yo. Damn.
So AMC price from black hole 1, and it follows, right? We're doing this. So notice like it's also fighting this black hole. So we're not getting like a clear run up just to go past, you know, MOASS yet, because it has to fight these black holes. And as I'm like following the path of the price action, you'll see that it kind of tugs with each other because of the black hole. Now I'm hitting the event horizon, right? And that's where I'm meeting the new black hole, and you'll see the box kind of like wiggle and rotate. It's fighting for control. So this is where we see like the price may go down a lot, the price may go up a little bit, and then spike downward pretty hard, or vice versa, is because it's fighting to get to the epicenter. Once it gets to the epicenter, that is when we have large run-ups, just like this here, as I cross the epicenter. And then it repeats all over
fucking
again.
insane. I fucking love it, man. Zoom in some more when you can, so that people can see the graph. He's got the chart overlaid throughout the entire thing. It's fucking insanity.
Well, what's interesting is like, I know nothing about mathematics. I'll briefly touch on my history. I worked in the medical field for about eight years. And the last time I touched a math book was probably about like 18 years ago, possibly.
I don't even think that matters. You know,
it doesn't matter. The fact that
you learned it all to get to med school.
the fact that we were able to visualize this for you guys is actually, for me, is insane. And I actually just joined Astro's community probably about like 5 or 6 days ago. And I was fortunate enough to come in exactly when Edward, he was the one that was talking about the Pythagorean theorem. and in the last 5 days, we've come up with these insane things. So now I'm gonna represent like these black holes in a different idea. That's probably all connected, to be honest with you. So where's my graph? I don't see my old. Here we go. So this is getting a little bit more now. This is the Mandelbrot theory. So basically, just a rundown of the Mandelbrot is basically a mathematical equation that that it basically repeats itself over and over again. To visualize this for you guys, I'm just going to show you a very brief idea of this. So hold on. Mandelbrot animation. I'm sorry if this is a little, if you guys are doing
Hey,
a little
BossBlunts, you
LSD
may
or
want to
anything.
hit your blunt real quick.
Yeah. All right. So this is the object of the Mandelbrot,
Thanks,
right?
brother.
Hit that bong, yo.
Yeah. If you guys are on drugs, I apologize. This might take you for a little wild ride.
No, even if
Basically,
you're not.
even if you're
even
not
if you're
on
not,
drugs.
yeah, this is true. This image is going to repeat throughout the animation.
On drugs.
Yeah, let me make sure it's
open up
not
your whole
audio
world.
for you guys.
And it's really cool when he stops it. You think your brain keeps going. It's
Let's
weird.
go, Dark
So-
Side of the Moon, baby.
Yeah, so it actually
Explain that this is
repeats.
price volume, volatility, and shit. Explain what the fuck this is.
So what this is the value, the valley of the seahorses. This is called a bifurcation point. When we exit the large mass, so when we exit this large bifurcation. Okay, I'm sorry, I'm saying that wrong.
Yeah, bifurcation.
I screwed it up last night with everybody when I said by purification. And
Oh, okay, that's
Purification. Shit, it's
Hey,
not
man,
exactly
I'm a
easy
dumb-
stuff.
It's not.
it's hard.
So
Think of
when
bifurcation as the letter Y. When it goes straight up and splits into the two arms, that's a representation of bifurcation.
Okay. So, see, my understanding is like when we exit one of these, we get a huge run up, right? So down here, we're very close to the next movement. I don't know how close, but we're very close.
Oh yeah, you're right with we're in the seahorse effect, but as it changes image like it just did, that's where we typically run in price, and then we start the next pattern like it's doing right now.
So you see here, this is the Fibonacci golden ratio. These are the spirals that are on the chart. What's crazy is like before I even saw this, like we were kind of implementing it. It's incredible. And it just goes on and on and on and on. So now
Until it changes image.
yeah,
Wait.
we'll go to like the weird part here.
Crazy.
Zabi, are you still here?
Yeah.
Tell me when to stop, like when we kind of like saw it all, right?
Hold on, let Daddy get it.
Keep going for another like 15 seconds.
Okay.
Yeah. I totally want to crash into my monitor.
People watching BossBlunts are like, what the fuck?
Dude, this is BossBlunts for a reason, man. That's why you're on this channel. Watch shit like this.
I know, it's great.
Something
I love it.
hijacking our brains.
Hey, stop
So
right
right here, okay, right here. You want to back up a little bit?
Dude, does it feel like it's still moving? Everybody, tell me.
Yeah.
Yep.
I feel like I'm in a swimming
LSD
pool.
now.
It's still
If he
fucking
does
going.
back it up, is it fat enough?
You're in LSD now.
Fucking awesome.
So notice the swirls here, and this is like the more swirls, and like this is what would we call this, Zabi, or is Ever still here? This is like the
Singularity.
the singularity, like the black hole, right? So this is what we're essentially evolving or revolving around, I guess. I don't know how to really explain it, but Yeah.
Yeah, within the spirals, there's like these singular like the spirals come all the spirals come into one point, and that one point transforms into even more spirals.
Yeah.
Which has a center spiral of its own.
So oh man. So we got this all through this one image with a formula, right?
Wait,
Now,
it plays for 15 minutes, 16, 17
yeah,
minutes?
it plays for that's when
long
the
as fuck,
singularity
dude, because
occurs.
it's all price
There
action. It's
are
price
some
action,
videos
it's
that are
numbers.
4 hours long videos out there on
It
YouTube.
goes on like for a very long time.
All right, I have a homework
Volume
assignment for
over
somebody.
time. Volume
Dude,
over
we're
time.
so retarded.
It's numbers
Whoever
of volume that have to go through somewhere, and they go in patterns. And this is what it ends up coming out when you translate it mathematically in various ways.
I want somebody to smoke a big fat bowl and then watch this for like an hour and then tell us what happened.
Dude, I'm high as shit. I was just watching this. This is awesome.
So you
I
need
got
to
work
take
to
a
do.
tab, bro.
I'm over. I
You
got
need to
work. I need to
graduate.
concentrate on my work.
Yo,
So
JT.
Yeah, so what's crazy is at the end of this, we go back to the same image.
Yep.
And that's what's coming up. That's the
Yo,
center
you
of your
see that?
screen right now.
You see that dot?
Yep.
The black
This
fucking
is
hole. The
this
Event
is the
Horizon.
Mandelbrot.
Does that not look
Who's
like
that
Buddha?
Pokemon?
That looks like Buddha, doesn't it?
That does, yeah. I mean, it could also look like
If you've ever done
Mr.
DMT,
Rhyme. I don't know.
you know.
Yeah.
It's a
So that
ladybug with a big fine ass.
Yep.
that's the Mandelbrot right there, right? So check this out. So now we got this is producer Welch's graph, and then I kind of lined up the Mandelbrot over it. So basically, what I saw is that there's also an animation. If that guy's here with the animation, that would be great to see. Might be in one of my tabs. So it basically follows this path here, and then we hit a new like, I guess like different path or 3D dimension, right? And the Mandelbrot is actually taking us, and look where it all lines up. That's what's crazy.
Are you talking about that interactive one I found last night?
Yes, or
Hold
we
up
could
for
show
it.
that too. That'd be great. I might have both still in my tabs. So we could see that like they're lining up to the price action. It's almost crazy. We distorted it to kind of see the parabolic move, and there's a line right here in the center, and that's what that's following to go to this line here in the center in the basin.
Yeah, it's bent to the basin if you haven't seen it.
Yeah. All right.
It's like a large cylinder.
Those are all my tabs. Oh no, I didn't.
So I have a really serious question. When Lambo?
I would like to know the same.
October 5th.
No sentimeter to tell when Lambo.
Well, actually, like a week or two after that, because it'll take a little bit to, get your money situated where you want it.
Yeah.
Or just pull out your 200K and go buy one.
Man, I'm so hyped, but not that hyped
Where's
because it
that?
might not happen, but still hyped.
So this is the Mandelbrot, like, this is an interactive version of the Mandelbrot. And you could actually click on certain parts and zoom in forever. And it'll create that. It might be easier if you saw it like maybe like right here.
Shitting.
It looks like the ass.
Yeah, this is the ass cheeks.
That's where we
slap that
exit
ass.
into the MOASS. That's the MOASS right there. See that?
Yeah, it's literal
Oh
MOASS.
shit.
So
We
now
were
you
talking about
can like
golden showers yesterday.
Yeah, no, that's the other direction. We're not going that way. We're going out the ass.
And because there's always more.
Hey,
When you zoom in.
so here's something, right? So we always, whenever we picture the Mandelbrot, it's always pointing, like if you consider it pointing, it's always pointing to the left. What if you flip it over?
I was thinking that too. That's why I was kind of like goofing around with it. I think Zabi was doing that as well.
Because it could be a golden shower. I mean, I'm just trying to make it fair for everybody.
I was thinking about flipping it over earlier too, but will it break it then?
So
Depends on how sturdy the doll is.
Only
What
if
do you
she
mean
wants you to
flip
break it.
over? like it won't really.
No, what I mean
It'll
is
be the same thing.
notice how it's pointing to the left, right? So the
Yeah.
small end is pointing to the left. What if it was pointing the other direction? Why is it
And
always
the
point to the
chart,
left?
then everything would be looking at would be just inverted, and then like that's the only difference.
Maybe that like reverses time, and then we have like a time machine. We
Yeah.
can build a time machine.
So essentially, when we get the price action and we exit one of these
Louis?
large
Chaos ensues.
large
Louis.
areas, this is like
Oh,
controlled
who's your brother, man?
chaos, right?
I
But out
hate-
here is the chaos.
Hey, Sunburn Jones.
Well, watch out for your mic, buddy.
Mike.
It's
Oh,
hot.
sorry. Yeah, once you
Okay,
get out of
you're
the
okay.
black, it goes to infinity.
Yeah, so see, like here, it's like the singularity. Boom. And this
Did
is
you watch?
this is where we
Sorry.
could have massive run-ups to the top here. But what I'm seeing is Zabi kind of pointed it out. There's these little like fields here, and it's actually stopping the price. But if the velocity is so fast, it will break through these lines. I'm trying to correlate if these lines have something to do possibly with MACD or something. So that's
hold
what
on.
I'm doing. Go ahead now. I'm sorry.
I don't know what they correlate to on the price, but I don't know. Did you watch that video fucking Welch put up yesterday? It was like last night or early last night. I can't remember. It was talking about the whole Mandelbrot thing, and I watched both of them. And the dude goes to explain. So the darker the lines, the more, the closer it is to infinity. Obviously, that's why it goes from the lighter blue to the darker blue. And then, so like on one of the videos he was doing, he zoomed in on like the white part of one of those little bulbs, and then it completely not distorted the image, but it went to like the spirals, and then it started putting out different colors. And he was saying that those are different values of how close you're getting to infinity. It's like a ratio almost. So as you get whatever, like you're saying, tying it to MACD or whatever proportionate value would be to the stock market, then the further away you're getting, the more chaos ensues, right?
Absolutely. Yeah. So when we say that like the hedgies are in control, no, I think the law of nature is controlled just because it's trying to I don't know what it's trying to do, but it's trying to do something. And that's how I feel about it. That's my personal opinion. But as far as like correlating with these lines here, like we're watching Zabi and we're seeing that where are we at here? I think that's this one. Oh, all right. So we're seeing that some of the, if I'm gonna zoom in here, some of the price action, they're like respecting these lines. So the next, for me anyway, the next idea of visualization is how I could interpret these lines here, and which is basically just a Mandelbrot, but it's having these lines here as far as like I don't know. They're like walls almost. I don't know exactly how to explain them, but
Each one it intensifies.
Each one intensifies, and if it breaks through all this, this is where MOASS occurs, right? That's what we're getting at.
I don't think it'll necessarily be able to break that because, like you're saying, it's just nature's laws. It can only go. So well, here's what I'm thinking. I'm thinking if it were to break that whole thing, that's what would have happened in January if they wouldn't have stopped the buy.
That makes sense, actually.
They would have broken their whole.
It would have
entire
broken.
system.
I agree.
That
there's a reason they would not have taken that action like that for no reason.
Exactly.
Or just
That's what
to
I'm
save them some
saying.
money. Like they're trying to save the whole fucking ecosystem because this is what the market's based off of.
But if they're forced
that's why
covering,
they needed
what
to
would
take their time?
How would they contain this if they're forced covering?
That's where I don't know. We were talking about it earlier.
Manage the event.
Well, but that's what we're saying earlier is that when it gets too bad and they get margin called and the DTCC takes over because they couldn't cover in an hour for whatever reason. And this isn't the big guys because I really don't think
it starts with
that
the
the
little
big
ones.
wigs aren't going to be able to cover. But I think once they get to that point, that's when the computers take over. And when the computers take over, the computers aren't going to maintain this algorithm. The computers say, fuck your algorithm. And then that's when the buying, and that's when I think we break through that.
Yeah, that's going to be straight up gamma squeezing. right there, and it's just going to push it harder and harder for sure, because when those numbers go up higher like that from all the buying back, it's gonna cause other hedge funds and banks to become margin called, and then they will margin default, and it will take again another hour, maybe another day or two, and then there will be further liquidations of their assets and buying back at the same time, because NSCC 2012-010 is not yet in effect. So that's fine for us. That's actually a good thing, no matter how much people don't understand that. I keep telling everybody it's a good thing. That way the taxpayer is not left paying for the hedgies. The hedgies and the banks are paying for the hedgies' mistakes and their own greed, banks' greed. So it's actually a fantastic thing for us all. It will lead to further margin defaults. We're going to see more things like Marin, MRIN, and what was that other stock? BB was running also in after hours and in pre-market today. We're going to be seeing a lot more of that, and it's going to trickle its way up to AMC and GameStop. So I am very much looking forward to this week and next.
Absolutely. Thank you guys for letting me kind of show my interpretation of this whole theory. I actually gotta get going. I got some stuff.
That was awesome, dude. Thank you so much.
You guys.
Everybody, look up on Twitter, XJThundaX, and on YouTube as well. Check them out on Discord. Hit them up everywhere. XJThundaX. Thank you very much.
Appreciate you guys. You have a good one, man. Take it easy.
Peace out, bro.
Peace. Bye-bye.
Yeah, that was fun to watch.
I got a theory on this margin call thing, okay?
Yeah, let's hear it.
And I don't know if I'm right or wrong. I'm just going to ask the question. Is it possible for them to step the margin calls? Where we think, okay, the DTCC is just going to margin call these guys, right? Because they default or they reach their over leveraging, right?
Yeah. What was the word you used? Step there?
Yeah, like if like they can only do maybe, I don't know, 30-40% of the margin call, and then or maybe do a smaller one and then a bigger one. You know what I mean? I don't even know if it's possible. But I'm just curious if that's a way they might, like I said, step the margin call to an effect. Like maybe, okay, computers need to do this many shares.
No, I mean that's
the thing with the margin call is it's not a process like, okay, we're going to margin call bank A. It's all based on their margin. So that's why I said the big guys, they've got enough. It's liquidity. So depending on their liquidity is going to depend on if they can maintain their margin. If you've ever been margin called, we were talking about this last night. You know, it's based on their risk, your risk level and your liquidity. If you have $0 in your account and you've used all your margin, and now the volatility or your stock goes down, you have 1 hour to come up with that money, or they start selling off your assets. So it's not okay. Well, we have to go low, guys. So if everybody hits that, if everybody hits it at the same day, then everybody's going to get margin called.
I get you there, and that is something I'm kind of struggling with. But
yeah.
So it's okay. Let's say the smaller ones go first and start tumbling. Even there's not a way for them. They're just going to hit the buy button then, right? That's essentially the computer's just going to buy liquidate their portfolios.
Once they default. Yeah, once they default on the margin, because again, you have an hour, so that's when that's why 012 is coming into play, because they don't want this to crash the entire market. Because if they're going to try to hold on to these shorts, then they're going to start selling Google, they're going to start selling Apple, they're going to start selling all this stuff, and you're going to see Apple drop 20% in one day, which then causes a ripple effect for everybody else. Yeah, so but that's why 012 comes into play
to prevent that.
So instead of selling it, they loan it to other market makers for that money, and then if they default from there, then they basically sell it, in to these other market makers.
Hey,
but
FBI,
that's why BossBlunts is saying that it's a good thing for us. What's that?
Question. Where did the 1 hour come from? Because I was trying to tell somebody about that, and they were like, "What? An hour? That doesn't make sense."
I mean, well,
that's a rule.
From
That's
what
part
I
of the new
understand,
regulations.
I could be wrong.
No, you're not
I think
wrong.
it is a rule.
That's part of the new regulations, part of the new filings. I know that for a fact, and I'm not sure exactly which one, but I could probably pull it up in about 5 minutes here. But yeah, the new regulations.
Some of that new stuff from September.
The Phase 5 regulations, yes, sir.
Phase 5. Okay.
That changes the margin requirements to banks for $1 trillion and to hedge funds and offshore holding companies of $250K apiece. That also there's additional filings that go hand in hand with it that the DTC margin calls requirements give them 1 hour to comply, and if they've not complied, then the DTC has to go in and manually start to review things, and then once they've figured it out, their computers will start buying shit back.
So
okay,
in that
that's all
aspect,
over fixed, or is that the BTs?
we all talk at the same time. Not everybody wants now. All right, screw it. So
answer my
with
question.
that being said, is there a way for them to delay that process then, or pick and choose? Okay, so and so is getting margin called here. Not that they get to choose which company. Just okay, this guy got margin called. Now what do we do with this?
They're not
do you
gonna
think
wait
there's
for
a
that
way
to
for them to
happen.
pick
They're
and
not going to wait
choose?
for that to happen. These guys are going to start delta hedging and buying back before another one gets margin called. So it's going to start causing like a mass wave of price going up, and then that's going to, when you take that into account with FOMO buying, and it's going to cause an effect that leads to gamma squeezing for them to cover for in the money options. So things are going to get really out of hand, and then it's going to calm down. There's going to be a lot of halts, and after a while, things are going to calm down, and then after about some more weird price action, after about an hour or two, then you'll see some more hardcore price action, because it takes time for these margin defaults to be. They have an hour to meet the margin call, and then if they don't, then it takes further time to actually start the buying back. Maybe it may or may not be an immediate thing. The computer may take some time to start analyzing the things, and they may have to go in and manually analyze a portion or all of it before they're able to start the selling of their assets and the rebuying of the shorted stock. So it could even be 2 or 3 days after the margin defaults that we start seeing the crazy price action. But before that happens,
And that's kind of what
you'll
I'm
start seeing the blue
getting
chips
at.
and assets of companies like Citadel and these smaller hedge funds start to sell off. So yes, you'll see blue chips and other assets and crypto and shit dumping. And then a day or 2 or 3 later, then you'll see the buying back of AMC and GameStop and other shorted stocks like MRIN. MRIN probably didn't go up 72% because they wanted to. And same thing for BB earlier. Somebody probably got margin defaulted. We just haven't heard about it. We don't hear about that kind of stuff.
Yep, BB is back on the rise up.
What's
Literally
it at?
saw.
What's it at?
I have a quick question then. Is there some place where they post which hedge funds are getting defaulted on?
No, that's not really a thing. I don't think you really hear that about until they go out of business or they report it on filings.
I have another question. Do they get margin called on specific securities, or is it like a full bucket sort of thing? Like, are they being margin called on BlackBerry right now?
Someone else probably knows better than me. I don't think it's not on any one thing. It's
Right.
on the entirety of their assets, because it's all their liabilities leveraged by their assets. And if that percentage is off just a little bit, that leads to a margin call. And margin calls are very common. People don't realize that. Margin calls are very common. They happen every day.
And
but not
I've
margin
been margin
defaults.
called.
That's more rare.
No, but that's
Uh-huh.
why we can push AMC, as hard as we want. If we get way up there and nothing else does, then they might not get margin called because, well, they're fine everywhere else, and everything else is kind of covering them. So, right?
Yeah,
So
everything's
it's not
gonna take time.
necessarily.
People expect it to be like an overnight kind of thing, but it's not going to be like that. It's going to be more. It's going to. I think it's going to start soon.
Right.
I don't know. Who knows?
I mean, no.
What
I'm clarifying is that just because AMC is running up, it doesn't mean they're going to start getting margin called.
No, not right away.
Because the margin call is based on their entire portfolio.
Yeah, so it's going to take time. You're going to see like the bonds tanking, American bonds tanking, along with all the other worldwide bonds that are negative. That's going to cause them to lose assets, and so there'll be further defaults and further assets losing in value, and the percentages will change. The exact way they do it, I don't know, but from my research, that's what I found out. That once they get.
Did anyone see the price action of?
It just equals a margin call. Period.
When Archegos got liquidated or margin called, and was it March or something? And and there was like 3 blue chips I was watching immediately just tanked 50%. There was
Viacom was one of them.
It was Microsoft, and then what's the company that was like all media? Viacom, yeah. Viacom just went down. It went down 50%, and then that's when like everyone just started buying, and they realized like, what the fuck, Viacom's 50%, like what that? And so like everyone was just buying them up, and so it didn't blow even 50%. And then like a couple hours later, like, oh shit, it's Archegos getting margin called, and so it dropped. Like a blue chip just dropped 50% in like over an hour. Because of the margin and Microsoft, because that was the margin call. So it took like an hour, and they were just selling off all their assets. And it took them like 3 days, I think, to recover. But they went right back.
And that's
80.
just one. Could you imagine what's going to happen when these it's bunch of hedge funds are all getting margin called at once because all these bonds are tanking worldwide and they're negative again for the first time since fucking COVID? Like it's going to be much worse because all this shit's just been kicked down and the government can't continue to print money to get us out of it. So we're kind of in a situation where we've reached the dead end, and the debt ceiling is, in my opinion, the government's way of bursting the stock and real estate and bank bubble. So I think we're gonna go
Marcel,
for a fucking
quick
ride,
question on the
guys.
debt ceiling.
Yeah, what's up? We're gonna be fucking rich. That's what I think.
McConnell keeps saying how the Democrats will raise the ceiling and they shouldn't play Russian roulette.
No, he's not. He's saying they have to. He's saying they have to, not they will. He's saying the Democrats have to. And Allison, thank you very much for your donation. I appreciate you. I think we're all looking forward to margin calls. Appreciate you guys for subscribing, and B Samo as well for super chatting. Didn't mean to go off on a tangent there.
No worries. They have to, but at the end of the day, if they don't get 10 Republican votes, they can't raise it.
Correct. They still need 10 Republican votes to go along with it. They still do. You know, I think all the Democrats have to vote for it except for 3, if I recall.
Okay, gotcha. So in your opinion, does that seem unlikely? What's your gut feeling?
At least 1/3, if not a half of the Democrats are going to disagree. And then almost all the Republicans I would say 95% of the Republicans are going to disagree with it. So it's, in my opinion, we're going to default on the debt for the first time in United States history, and the government's going to shut down on October 1st.
Unless they agree to the bipartisan bill. I might be fucking this up. I'm not well versed in this stuff.
They got to agree. Well, the debt ceiling, they got to agree to raise the debt ceiling. But the Republicans aren't going to do that because of the $3.5 trillion spending package.
They're tired of the spending, and they want the Democrats to take be on the hook for it. Like you guys,
they're trying to say that they're going to be playing it off as we don't want to, we don't agree with this. This is fiscally irresponsible. Yet the Democrats went along with it the last 3 times that it was done by Republicans. So it's just the way it goes. Like right now, it's the Republicans are having their way with them, and the Democrats are throwing a hissy fit. Old Yeller, Janet Yellen, is fucking crying and bitching and moaning and putting out letters and press conferences and shit because she knows that they're going to default for the first time. She fucking knows it. She's trying to warn the American people, but she can't come out and say it because it'll cause widespread panic.
Probably also why they need to get $1 trillion in a bunch of the banks too.
Exactly, and that's why the banks now are being stress tested by the Federal Reserve to the tune of $1 trillion starting October 1st. That's why State Street Bank is merging with Invesco QQQ. Excuse me, I'll be back in 2 minutes.
Boom.
Hey guys, what was the significance with the October 5th date? I must have missed something. Someone was saying earlier that they thought the big day could be October 5th, or was it the 1st because of the $1 trillion needed by the big banks?
It was the 5th, somebody said, but didn't give a reason. So yeah.
Yeah, I'm curious.
There's also some speculation about Adam Aaron tweets have been in sync with run-ups on the 24th.
Oh, that's conjecture. Golly, man, there's so many fucking. You guys are.
It's crazy. I got a headache.
He tweets all the time.
But the 5th does seem kind of good. I think it runs in line with UVXY and then
you know what also happens? I usually take a giant shit in a really nice, soothing pee before they run up.
At 8 o'clock every morning.
Every time there's a run up.
Give this man some fucking prunes. Let's go. Fiber it up, bro.
I haven't had a comfortable movement in 3 months. What the fuck? Let's go. Come on.
The
cycle theory.
it's my circadian rhythm is like my. Never mind. Yeah, but you.
Your ass is sinking.
Scary.
I mean,
It's out of
but,
whack.
but what about those dosimeters?
What?
Dosimeter.
Yeah, the dosimeter. You know, you haven't played around with that indicator. It's awesome.
Yosemite.
You guys know, right? Somebody tell me I'm
Like
right.
Yosemite.
I have no idea what the fuck you're talking about, brother. What is that?
BossBlunts,
Oh.
it's the best indicator you can use on your chart.
A
Jeez,
decimate? What
I mean,
the fuck?
if you,
School me,
yeah.
bust out a live
The
stream, man. Let's
discriminator,
see.
man, it measures the gamma rays.
Yeah, I mean, especially the ionized.
But remember, guys, you have to have the antithesizer on at the same time. So otherwise, it
Right?
doesn't
No,
work.
no, exactly. That's what I've been trying to say.
Do you have
And
to
it
connect
leads
the
to
flux
polarization.
capacitor?
No,
Yeah,
no,
only
no.
at
That
88
has nothing to do with that.
Watts.
Yeah, it's not about time. It's not about time.
Ugh. There's no
All
dates.
right. Well, if somebody wants to bust out a video, I don't know how to fucking do that, but I can't bust out that chart. That's for sure.
Oh, you got it. No, well, you Google it. Google it. You'll be all right.
All right, I'm gonna have to. Yeah, that sounds pretty cool. Appreciate you guys. All right, I got to get out of here. I got to wrap it up. I just want to thank everybody in this stream for all of your knowledge in this Discord group. Thank you guys so much.
Which color is yours?
So I'll see you guys a little bit later. Have a great evening.
Take care, Marcel.
And everybody who's watching this, I just want you guys to know that this is a live, due diligence / technical analysis session in Discord. All of these ideas are their own, our own, and we are simply trying to provide entertainment and insight into what we believe is going on with these stocks as well as other heavily shorted stocks on the market. So I would like to thank everybody here for helping educate Americans and people worldwide, because I know we've got, followers and people that contact us daily, from Africa and the Middle East and Germany and Australia and South America every single day. So, shout out to all you, people in the military over, overseas in the Middle East that are fighting for our country. Thank you very much for your sacrifice, and thank you everybody for your support. Much love to everybody. Peace and wealth, everybody. Have a great day.
Peace.